Good morning, everyone. So in our last session, we completed up to this accounts and records segment 12. Now we are moving on to segment 13, that is assessment and audit. So in this, the first area is about various interest provisions under GST. So this is a recap of whatever interest provisions that we have come across in different places. So section 50, subsection 1 already we have seen for delay in payment of self-assessed tax liability. So what is the interest rate? 18% per annum, and from when it will be computed? From the first date after due date till the actual date of payment of tax. Previously we had this undue or excess reduction in tax liability, but that is not applicable now. So the 24% per annum interest and all is not applicable, that is omitted. But instead we have wrong availment and utilization of ITC. Then section 60 is about provisional assessment getting finalized. So whenever there is a provisional assessment and that provisional assessment gets finalized, so there is a differential amount that we need to pay. That differential amount we need to pay along with interest at 18% per annum. From when? From the first date after due date of the month in which provisional assessment is resorted till the actual date of payment. And section 16 already we have seen, that is for non-payment of consideration within 180 days from the date of invoice. So then we have to pay interest at 18% per annum from the first date after utilization of ITC. So this is not availment, so please correct it to utilization of ITC. First day after utilization of ITC till the date of addition of such ITC to liability and paid. And section 17 is what? Read with rule 42, differential amount, that is D1 and D2 computed every month versus D1 and D2 computed at the end of the financial year. So 18% per annum, first day of April of succeeding financial year till the date of payment of such difference. And both days, all these are, both days should be included. So I say first date after due date. So due date we will not include, but the first date after due date we need to include. So here everything, both days are included here. Then section 17 read with rule 43, reversal of ITC pertaining to capital goods, 18% per annum. Here it is first date after availment of ITC, that is correct. So here no need to change it to utilization. So date of availment of ITC till the date of addition or reversal. And section 56, there is a delay, like interest on account of delay in giving the refund. So what is the time limit within which the refund should be given by government? 60 days from the date of application. Otherwise from 61st day interest will be computed at what rate? 6% per annum till the date of refund. And suppose if the refund is arising on account of any assessment order or adjudication order by the authority, then in that case the interest will be 9% per annum. Again same, 61st day from the date of application till the date of refund. But this 9% per annum, so generally we will not be applying unless otherwise it is specifically given. So generally interest rate will be 6% per annum only whenever the refund is arising. And here due date, so if you see first date after due date, so first date after due date means what? First date after due date of return. Which return? GSTR 3B return. So usually 20th of the month following every month. And suppose if there is any delay in filing GSTR 3B, then interest will be payable on net liability, means that amount which is paid using the electronic cash ledger. For example, so GSTR 3B of a particular month, GSTR 3B of March, GSTR 3B of March 2023 filed on 30th April 2023. So there is a delay by how many days? So delay by 10 days. Because the due date of GSTR 3B is 20th April of the succeeding financial year. So there is a delay by 10 days. For these 10 days, now we need to see in this GSTR 3B, how much is shown as gross liability. So the gross liability that is shown in GSTR 3B is 8 lakhs. And we have balance in electronic credit ledger. So paid through electronic credit ledger is 5 lakhs. And paid through electronic cash ledger, So what will be paid through electronic cash ledger? 3 lakhs, which is nothing but FCM as well as RCM liability, correct? So what amount we pay through electronic cash ledger? FCM liability after adjustment of input tax credit and the RCM liability. So therefore, here interest needs to be computed on what? So therefore, interest equals to, so interest is on what? 8 lakhs or 3 lakhs? 3 lakhs, and what rate? 18% for the delay, that is 10 divided by 365. So this is on account of delay in filing 3B. Now here what happens is that, so GSTR 3B of March 2023 filed on 20th April 2023 by due date, okay, and we missed a liability for this March, for this particular month of March, okay. So 25,000 rupees of tax not reported in 3B, not reported in 3B, which means we have not paid the GST liability with respect to 25,000 of March. And when are we discharging this? So this 25,000 rupees is paid in GSTR 3B of July 2023. You understood? So by 20th of August 2023. Now this 25,000 rupees whatever we are paying in July 2023, so definitely we will not pay fully by cash ledger, because in this GSTR 3B, that is this 25,000 we are discharging in 3B. But how are we discharging this 25,000 rupees? So that 25,000 rupees paid through electronic credit ledger, so say 15,000, and paid through electronic cash ledger 10,000. You understood? How I know this? So that 3B of that particular month I am discharging in this ratio. You understood or not? 3B liability of that month I am discharging in the ratio of 15:10 or 3:2 ratio I am paying, which means this 25,000 rupees also I would have paid using electronic credit ledger 15,000 and cash ledger 10,000. Now interest is payable, correct or not? So what is the period of delay? What is the period of delay? The period of delay is, so this 25,000 pertains to which period? March 2023. For March 2023, what is the due date? 20th of April 2023. So therefore, we need to compute it from 21st April 2023 till the date of payment, that is 20th August 2023. So the number of days, if you see, in April month 10 days, May 31 days, June 30 days, July 31 days, and August 20 days. That is 122 days. For this 122 days, interest will be computed on what? So 25,000 or 10,000? 25,000. That is what I mean to say as gross liability. Gross liability does not mean whatever is there as gross liability in 3B. Gross liability means whichever tax I have not paid, that amount I am paying partly using credit ledger and partly using cash ledger. I need to take the entire 25,000 and compute the interest. So therefore, interest will be 25,000 into 18% into 122 divided by 365. So that's how we need to compute the interest. Now got the clarity related to this? Next. So now we are moving on to assessment under GST. We have total, 5 types of assessment: self-assessment, then provisional assessment, scrutiny assessment, then best judgment assessment, and summary assessment. So section 59 talks about self-assessment. So what is self-assessment? Every person can compute how much is the tax payable. So, and he will compute that and he will file the return, that is known as self-assessment return. So section 59, who will be doing the self-assessment? Registered person, and note is not applicable, and every registered person has to assess the tax payable and furnish the return. And what is the time limit of the self-assessment? Due date of filing return. And any officer to take permission not applicable, withdrawal of order not applicable, no consequences. So self-assessment is completed. Now whenever a person is unable to compute the tax payable, self-assessment is unable to be computed. Why it is not able to be computed? Maybe the rate of GST is not known or the value is not known. Then in that case, so taxable person. So what is the status of the person? Taxable person. So by proper officer, is there any notice? There is no question of this. And the situation where the taxable person is unable to determine the value of goods or services or both, or determine the rate of tax. So here the difference is self-assessment will be for registered person, but provision assessment is for taxable person. And who will do this provisional assessment? By the proper officer. And why there is no notice? Because this person, taxable person, is only making application for provisional assessment due to that reason. So what are the cases where provisional assessment will be resorted? When taxable person is unable to determine the value or the rate. And what is the time limit within which the provisional assessment order should be passed? Within 90 days from the date of application. And what is the time limit within which the final assessment should be completed? Within 6 months plus 6 months plus 4 years, the final assessment should be completed. So 6 months plus 4 years from which date? From the provisional assessment order. So provisional assessment order, application to provisional assessment order 90 days, and provisional assessment order to final assessment order 6 months. It can be extended for a further period of 6 months and further 4 years, and that is the maximum time limit. Means literally 5 years. 5 years they can take to pass a provisional assessment order. And officer to take any permission, prior permission, no. And withdrawal of order also no. Now what is the consequences? So upon finalization, we need to calculate the liability. So differential amount either payable or receivable. So final assessment tax minus provisional assessment tax. If it is positive, means what? We have to pay that. And what is the time limit within which we need to pay? Anytime we can pay, but we have to pay interest. Interest will be at the rate of 18% per annum from the first date after due date of the month pertaining to which we have resorted for provisional assessment till the actual date of payment. Suppose if it is negative means what? So that is if there is excess payment. So under provisional assessment we have paid excess, and under final assessment it is less. So if it is negative, then get the refund plus interest at 6% per annum from 61st day till the date of refund. Okay, so we need to make an application, and after application from 60 days, within 60 days they have to give the refund. If not, from 61st day the interest will be computed at the rate of 6% per annum. But when we need to pay from the first date after due date till the date of payment, that to 18%. But when they give, final assessment will be completed, thereafter we need to make application, thereafter 60 days, and then only interest will be computed from 61st day. And next one, so we have scrutiny assessment. Scrutiny assessment will be done by proper officer. And when it will be happening? So any self-assessed return will be taken up for scrutiny by the proper officer. So registered person. So therefore self-assessment and scrutiny assessment are connected. So whenever we file a self-assessment return, that self-assessment return filed by the registered person will be taken up for scrutiny by the proper officer, and definitely they will be giving a notice. So because if there is any discrepancy during the scrutiny, so they will be giving notice for that reassessment. And situation, in order to verify the correctness of the return, the proper officer may examine return and seek explanation. Whether all returns will be taken up for scrutiny? No. So randomly the returns will be selected for scrutiny. And is there any time limit? No, not given. But logically the time limit under section 73 and 74 should be followed. Why? Because after scrutiny assessment, what will happen? If suppose they identified that the person has to pay tax, and to recover that tax we need to pass an order. So recovery order is in 73 and 74. 73 time limit is 3 years from the due date of furnishing annual return, and 74 time limit is 5 years from the due date of furnishing annual return. So by that time when you pass the recovery order, then only you can recover, otherwise you cannot recover the tax. So even though under scrutiny assessment they have not given any time limit, but we need to read the demand and recovery section to understand, because there is a time limit for recovery of the tax. So within that time limit they need to pass the order. So that's the reason why logically before the order under section 73 or 74 they have to do. And any permission to be taken from the officer? No. And withdrawal of the order also? No. And consequences, suppose if explanation is not obtained within 30 days, that is a notice will be given. So for what purpose notice will be given? So like specifying this is the amount you need to pay. So it appears that this computation is not correct. So then either we need to accept that and we need to pay, or we need to give a reply. Suppose if explanation is not obtained within 30 days or extended period, or registered person fails to take corrective measures, then the proper officer may either conduct audit or initiate recovery. So recovery, when he initiates, what they will do, they will pass a order. Already notice has been given and they will initiate the recovery order under 73, 74, and once they pass the order, thereafter recovery proceedings will be initiated. Is it clear? Then next, best judgment assessment. Best judgment assessment will be applicable in case of section 62 and section 63. So section 62 best judgment assessment is, so non-filers of returns. So already we have seen in case of returns, so one notice will be given for non-filers of return, that is GSTR 3A. So after GSTR 3A, within what time limit we need to file the returns? Within 15 days. Within 15 days, if we are not filing the return, so then what will happen? So the proper officer can initiate best judgment assessment, and any opportunity of being heard is given. Yes, that notice is there under GSTR 3A. Where registered person fails to furnish the return within 15 days from GSTR 3A notice, then proper officer will do the computation of tax payable. And what is the time limit within which best judgment assessment should be completed? Within a period of 5 years from the date of 31st December of the financial year for furnishing of the annual return to which the tax not paid pertains, which means that financial year say 2022-23. For financial year 2022-23, what is the due date of furnishing annual return? 31st December 2023. So from there within 5 years, 24, 25, 26, 27, 28. By 31st December 2028, they need to complete the best judgment assessment order. Best judgment assessment order time limit is equal to 74, section 74 demand and recovery time limit, 5 years. 5 years from the due date of furnishing annual return. Then officer to take any permission, no. And withdrawal of order, yes. Because once they pass the best judgment assessment order, we need to pay the tax as per the best judgment assessment order. But we have not filed any returns. So therefore, within 30 days from the best judgment assessment order, we can file the returns. If you are filing the returns, so actually best judgment assessment under section 62 is initiated for what reason? Not filing of returns. So file the returns within 30 days from best judgment assessment order, so that the order will be withdrawn and we will proceed to assessment as per our returns. You understood? So order withdrawn if valid return is filed within 30 days of the order. So within 30 days from the date of best judgment assessment order, if you are filing the returns, means you are filing the returns, there is no problem. Actually best judgment assessment under section 62 is initiated because of non-filing of returns. You file the returns, so then as per returns only it will be the tax. So best judgment assessment order will be withdrawn. Whereas another best judgment assessment order is there in case of unregistered person liable to pay tax. So there is an unregistered person who has suppressed his turnover and he is required to pay tax. So on that person, the proper officer can initiate best judgment assessment. Here also a notice will be given for passing best judgment assessment order. So situation where a taxable person fails to obtain registration even though liable to do so, or registration has been cancelled under 29, means what? Notice has been given for cancellation of registration, but he is liable to pay some taxes. Why he is liable to pay some taxes? Whenever there is a cancellation of registration, before the date of cancellation, whatever is the inputs as such held in stock, inputs in WIP, inputs in FG and capital goods, ITC avail needs to be reversed. For reversal of that ITC, so suppose if you don't have that much of balance in ITC, we have to pay. So if there is any tax payable by that person after cancellation of registration, to recover that they will pass a best judgment assessment order. Time limit same, 5 years from the due date of furnishing annual return. Officer to take any prior permission, no. And withdrawal of order also not applicable. So here there is no withdrawal of order. So in case of one best judgment assessment order, yes. So which one? Non-filers of return. But another best judgment assessment order on unregistered person, there is no withdrawal of order, which means what the person has to do, either he need to pay as per the assessment order, or if he want, he can go for an appeal. So pay as per assessment order or prefer appeal if not satisfied with respect to assessment order. Understood? Then, sir, but how he can make an appeal? He is an unregistered person. How he can make an appeal? So he need to get registered, because this registration he will not do. Proper officer will suo moto make this person registered. The moment proper officer pass a best judgment assessment order on that person, when the proper officer is of the opinion that he is an unregistered person but liable to pay tax, then proper officer suo moto will mandatorily make him get registered. Means proper officer will give the registration number directly. So this is your registration number. So his permanent account number will be there. How his permanent account number will be there? First of all, proper officer will come to know this fact based on the bank account. So bank account of that person, some credits are there. So which is more than 1 crore or 2 crores. But he suppressed his turnover. He did not get registered at all. Now bank account will be linked to permanent account number. So means we know his permanent account number. So based on that, proper officer will suo moto get the registration number and give it to him. So therefore, using that registration number, so this particular person needs to file the returns, whatever returns are there or appeals, etc. and all he need to know. But here unfortunately, once the best judgment assessment order is passed, even if he file return also, there is no other go. So he need to pay as per that assessment order only, or he can go for appeal. Then next one, section 64, summary assessment order. So students were asking for inter marathon, etc. and all. I am doing already. So some of your known people, if they are, please let them know. I am doing one free fast track batch for CA intermediate. So starting from tomorrow, it is in Mylapore Fine Arts Club. So free face to face I am doing. So if you know any inter students, do let them know. Okay. So some students have asked me here. So for them I am telling. Already I am doing. Okay. So timing morning 9 to 6. So section 64, summary assessment. Summary assessment is on the taxable person, and when the summary assessment will be conducted. So summary assessment, there is no notice. There is only one assessment in entire GST. Without notice, the assessment order will be passed. That is summary assessment. The summary assessment is like income escaping assessment. And who will be doing this summary assessment? Proper officer will be doing this summary assessment. And the proper officer has evidence that a taxable person has incurred a liability, and proper officer has sufficient grounds to believe that delay in passing assessment order may adversely affect. Say for example, proper officer visited the premises of a person and they have identified there are some goods, and these goods, so if they are delayed, if there is any delay in passing the assessment order, he may escape with payment of tax on that goods. So immediately they will pass a summary assessment order. Is there any alternative to summary assessment order? Yes, seizure order is there under section 67. So under section 67 there is a seizure order. Either they can pass a seizure order. Seizure order, if it is passed, the goods will be taken, and thereafter only upon payment of tax and penalty the goods will be released. That is under section 67 read with section 130. Okay, so that is one alternative. Another alternative is this summary assessment. Either they can resort to summary assessment or they can go for seizure order. So it is like department is having multiple powers. So whichever power they want to use, they can use that. So here the proper officer has evidence that a taxable person has incurred liability. What is that? Some goods are identified and on that goods tax is payable. And the proper officer has sufficient reasons to believe that delay in passing an assessment order may adversely affect the interest of the revenue. So then in that case, the proper officer may pass the provisional, like the summary assessment order. And is there any time limit? No, time limit is not given. But again, logically, this assessment should be completed within the time limit of recovery, because for recovery there is a time limit 5 years. So means by the time limit they have to pass this order. And officer to take any permission, yes. So because summary assessment order, there is no opportunity of being heard, no principles of natural justice. That's the reason why prior permission of additional or joint commissioner should be taken. Withdrawal of order, yes. So whenever the order is erroneous, that is those goods are actually exempted goods, and thinking it as taxable goods, a proper officer has passed the summary assessment order. So order is erroneous. If the order is erroneous, or if the person is making the payment as per the assessment order, so then proper officer may withdraw such order and follow the procedure under 73-74 recovery procedure. So that is with respect to assessment. Total 5, section 59 provisional assessment, section 59 self assessment, 60 provisional assessment, 61 scrutiny assessment, 62 and 63 best judgment assessment, 64 summary assessment. Then audit under GST. So this is 65 and 66. We don't have statutory audit under GST. So statutory audit under GST stands omitted. So therefore GSTR 9C is now not an audit report. So GSTR 9C is a self-certified reconciliation statement. And So two audits are there, departmental audit and special audit under section 65 and 66. So departmental audit, who will be conducting? So this departmental audit will be conducted by commissioner or any officer authorized by commissioner to undertake the audit. And who will be conducting the special audit? Chartered accountant or cost accountant nominated by the commissioner, not selected by the registered person. And in case of departmental audit, when that audit will be conducted at such frequency, so but that is not yet notified. So means now at present, whenever they want to conduct the department audit, they can conduct. Every year also they can conduct the department audit with respect to a person. Whereas special audit is during the any search or scrutiny or investigation, etc. So proper officer is of the opinion that the valuation is not done correctly or the input tax credit is not availed properly. So then in that case, during investigation or inquiry or scrutiny, it is found that value is not correctly declared or ITC irregularly availed, then the special audit will be ordered by the proper officer. And what is the time limit for completing the departmental audit? 3 months, and it can be extended for a further period of 6 months. Whereas there it will be 90 days plus it can be extended for a further period of 90 days. So there 90 plus 90 special audit, but departmental audit will be 3 months plus 6 months. And to whom the audit report will be submitted? In case of department audit report is submitted both to department as well as to the registered person within 30 days of conclusion of the audit. So the registered person, based on this audit report, if there is any discrepancies, he can make the payment of tax so that the show cause notice will not be issued. Or that person, if he has if he is certain that he is not required to pay, then based on audit report, so if at all order, notice and order is passed, he can go for appeal, means he can make the preparation accordingly. So but he don't have to go for appeal against the audit report. See, audit report is a precursor, and based on audit report, notice will be given. After notice, order will be passed. Okay, so if really there is a genuine tax liability to be paid, we can pay, so that notice and order will not be passed. Or suppose if department initiating notice and order based on the department audit report, so we should be prepared. Okay, either that is to make a reply to that notice, or suppose if order is passed, we need to go for appeal. So that is about this audit report given to the registered person also. Whereas in case of special audit, the special audit report will not be given to the registered person. The special audit report is shared only to the jurisdictional ACDC. And who will bear the expenses of audit? Expense of audit is borne by department, both cases, department audit as well as special audit. And scope of audit in department audit, as they can verify all records, like whatever records that we have seen, I formats, everything they can verify, and even trial balance or even income tax audit report, cost audit report, all records they can verify. Whereas in case of special audit, they can verify the records relating to value of supply or input tax credit, because there the scope of audit is limited to valuation and ITC. Then notice for audit, in case of department audit, a 15 days or 15 working days prior notice will be given. So suppose if the audit is to be conducted today, a 15 working days prior notice will be given. So for the purpose of conducting the audit, which means within this 15 working days, we need to prepare all the records, etc. and all, maintain those records. That is the meaning. And in case of special audit, there is no notice, means it is like a surprise. So one fine morning, so chartered accountant or cost accountant selected by the commissioner will come and knock our door, and we have to give our records for the purpose of audit. So direction to get audited to the CRCMA will be given, but there is no notice given to the registered person for audit. Whereas in case if the audit is already completed under departmental audit, so or special audit, so again can they order the other audit? For example, department audit over, can they order special audit? Yes. Special audit over, can they order department audit? Yes. Suppose if company's audit is over, stat audit or income tax audit, again can they audit department, etc.? Yes. So audit under this section is mandatory even if the audit is completed under any other law. Then can the audit be conducted for part of the year also? Yes. So department audit can be conducted even for part of the year. For example, I am a newly started business. I started my business in November, and November to March. So can they do the audit? Yes. So not that only for the completed year they will do the audit. So even for the part of the year also they can complete the audit. You understood or not? So that is this. The period of audit to be conducted is for a financial year or multiples thereof. Thus, commissioner or any officer authorized by him by way of general or specific order may now undertake audit of any registered person for part of the financial year also. So this is about assessment and audit, and looking to the next area, segment 14, appeals. So here, what is adjudication and what is appeals? So that basic difference we need to understand. Adjudication refers to the process of deliberation between the taxpayer and the department for the purpose of passing an order is known as adjudication. That is, first department will give a notice, and after notice, so they will be passing an order. That order can be assessment order, or it can be demand and recovery order, or it can be seizure order, or it can be any order. Okay, so adjudication is a phase. So in that phase, what will happen? A notice will be given asking the person to pay the taxes, and he need to give personal hearing or reply, etc. And the outcome of adjudication will be order. So either that can be assessment order, or that can be demand and recovery order under 73, 74, or it can be even inspection, confiscation order, or it can be seizure order. So any type of order that can be passed. So that stage is known as adjudication. And what is the outcome of adjudication? One order. On that order, what we can do? We can go for appeal. So that is the adjudication versus appeal. So adjudication is a process commencing after issuance of show cause notice for passing demand order or adjudication order. Usually that will be termed as order in original. And in this process, explanations are offered by the noticee either in written or in person by requesting a personal hearing. And if noticee admits the amount during that stage, he can pay that so that the order will not be passed. And who is the officer empowered to give the notice and pass the order? It is superintendent, lower level superintendent, and above superintendent it will be ACDC, assistant commissioner, deputy commissioner, and above that it will be additional or joint commissioner. So commissioner will not pass any order, will not give any notice. So these three people are only called as adjudication authority, and even anti-profiteering authority is also called as adjudication authority. Anti-profiteering authority will be passing an order, anti-profiteering order, for the purpose of not passing on the benefit of reduction in tax rate to the consumers by reducing the price. So tax rate has come down, but still you retain the same price, means you did not pass on the benefit of reduction in tax rate to the consumers by reducing the price. So then you have made a profited, that is, you have made a profit. To recover that profit, so they will be passing a anti-profiteering order. Same way, we have got more ITC. So more ITC means our purchase price will come down. So we need to pass on that benefit to our consumers by way of reducing the price, but we did not reduce the price. We retained the same price, because of which we got more profit. That is known as profiteering. To recover that profit, so they will be passing an anti-profiteering order. Is it clear or not? So that anti-profiteering order is also equal to adjudication order. On that we can go for appeal. Okay. So now this has a small logic that you need to keep in mind. That is, first what will happen is that there will be audit that will be conducted. So audit will be conducted, or there will be inspection that will be conducted, audit or inspection. So this is how department gets a entry. Okay, audit or inspection or scrutiny of returns. Either they will conduct the audit, or they will do the inspection, or they will take up the returns for scrutiny. Okay, and so this audit and inspection, actually speaking, this audit and inspection will come after taking the returns for scrutiny. The first point of communication between the assessee or the taxpayer and the department is returns only. Okay, so a person will be filing returns, and these returns will be taken up for scrutiny, and after scrutiny of returns, they will come to know that this person has to pay some tax. So then only they will be ordering for audit, or they will be doing inspection. And after this audit or inspection, they will come to know that some tax will be required to be paid. So thereafter, what they will do, they will proceed to give a notice. So they will proceed to give a notice, and they will be passing the order. So show cause notice, and thereafter demand or recovery order, demand order. And that demand order will be passed under section 73 or 74 or 76. There are three demand orders, 73, 74 or 76. So what will happen? First, returns will be filed by a person. These returns will be taken up for scrutiny, and after scrutiny the department comes to know that there is some discrepancy, so they will either order for audit or inspection. And after audit or inspection, so they will gather the evidence. So with that evidence, so they will be passing a show cause notice, and after show cause notice they will be giving a demand order. That demand order can be passed under section 73, 74 or 76. And during this inspection can be in the premises. Inspection can be in the premises, or inspection can be in the transit. In transit, okay, it can be in premises or it can be in transit. If the inspection happens inside the premises, so then what they will do, they will pass a seizure order. They will pass a seizure order under section 67, and thereafter they will pass a confiscation order. Thereafter they will pass a confiscation order under section 130. And suppose if they do this seizure, or that is inspection during the transit, and they will come to know that a person is required to pay some tax and those goods are transported without valid documents, so then the seizure order will be passed under section 68, and thereafter one penalty order will be passed. So that penalty order will be under section 129. Okay, this is one side. And then what will happen if the person is unable to file the returns? So then why he is unable to file the return? Because he is unable to pay the tax. So then what will happen here? Assessment orders will come. Which assessment order? Final assessment order, or we have best judgment assessment order, or summary assessment order. So therefore inspection in the premises, seizure order, and what is the alternative for this seizure order which I said? Summary assessment order. Summary assessment order, and that summary assessment order will be under section 64. So which is an alternative to seizure order. That is, either they can pass a seizure order under section 67 and thereafter initiate confiscation order under section 130, or they can initiate summary assessment order under section 64. And here, so there is something, non-filing of returns. If returns itself is not filed, so then there will be what order? Either, so final assessment order, final assessment order under section 60, then no 60, final assessment order under section 60, or best judgment assessment order under section 62 or 63. Okay, so this best judgment assessment order or final assessment order. So now these are the various orders. So this when it will come, if returns are not filed, correct? Returns not filed. If returns are not filed, if returns are filed, it will be like this: scrutiny, audit, inspection, like that. If returns are not filed, final assessment order or best judgment assessment order under section 62, 63. So on this final assessment order under section 60, best judgment assessment order under section 62, 63, demand order under 73, 74, 76, summary assessment order under section 64, confiscation order under section 130, and penalty order under section 129. On these orders we can go for appeals. Appeals against above orders. Appeals against above orders. Okay, and seizure order under section 67, 68 we cannot go for appeal. Appeal cannot be made against seizure order. So we have various cases appeal cannot be made. In that, one of the cases on seizure order we cannot make the appeal, but on confiscation order and penalty order can we go for appeals? Yes, appeal against the above orders. So you understood the logic behind this? Everything? Okay. So therefore this chart will be relevant, like you will be able to connect as to what is the process that is happening related to this. And so therefore, after this adjudication order, now appeal. So that is, there are multiple adjudication orders possible. On these orders, we can go for appeal. Here, one more point also I have missed, that is, if a person has, got some anti-profiteering. So even on anti-profiteering order also, they can go for appeal, correct or not? So one anti-profiteering order, anti-profiteering order under section 171, anti-profiteering order under section 171 also appeals can be made. See, all these handwritten notes will be there in the YouTube video description. This I will be uploading, so don't worry, even if you have not written anything, whatever I am scribbling or jotting down, everything will be there, so for reference purpose. And then appeals. So what is the first appellate authority? Commissioner appeals or additional commissioner appeals. After that, we will make further appeal to GST. After that, further appeal will be made to High Court. After that, further appeal will be made to Supreme Court. But we can skip High Court and directly go to Supreme Court, in which case, if the issue is pertaining to place of supply. For the matters pertaining to place of supply after GST, further appeal lies with Supreme Court. In GST, GST Appellate Tribunal, there are two benches. What are the two benches? National bench or national bench, also known as regional bench. State bench, also known as area bench. Okay, national bench or state bench. National bench or state bench. National bench will be hearing what issues? Place of supply. And state bench will be hearing all other issues. And the other name for national bench is regional bench, and the other name for state bench is area bench. So GST is divided into two benches, national or regional bench to hear place of supply, state or area bench to hear other issues. And we don't have the provisions relating to appeal to High Court and Supreme Court, because appeal to High Court and Supreme Court are governed under the provisions of CPC, Civil Procedure Code. And the outcome of the appeal order, the appellate authority, when we go for appeals, so they will give one decision. So the outcome of the appeal is known as appellate order or known as order in appeals. The outcome of appeal is referred to as appellate order or order in appeals. The outcome of the adjudication is known as order in original. So same way, the outcome of the appellate order is known as order in appeals. And to whom we need to make the first appeal? Commissioner appeals or additional commissioner appeals. So when we will go to commissioner appeals and additional commissioner appeals, so simple logic. So what is the department hierarchy who will pass the order? Adjudication authority. Who is the adjudication authority? Adjudication authority, already we discussed. Adjudication authority is, so Supreme Court, adjudication authority. So we have above. No, additional or joint commissioner, then assistant or deputy commissioner, and thereafter below him superintendent. Now, when you see first appeal authority, who is the first appeal authority? Commissioner appeals. Commissioner appeals will not be equal to additional joint commissioner, but below commissioner appeals we have additional or joint commissioner appeals. So therefore, logically, when additional joint commissioner passes the order, we should not go for additional joint commissioner appeals. So then we need to go for commissioner appeals, and below this, that is ACDC or superintendent passes the order, then we will go for appeal to additional joint commissioner appeals, because additional joint commissioner and additional joint commissioner appeals both will be in the same hierarchy. So how on this order we can go for appeal here? That's why we need to go to the next authority. So when we will go to commissioner appeals, against the order of additional joint commissioner. When we will go to additional joint commissioner, against the order of officer below additional joint commissioner. Below additional joint commissioner means ACDC or superintendent. Then what is the time limit within which the appeal should be made? So if the registered person is going for appeal, so 3 months plus condonation of delay 1 month. And suppose if department wanted to file a review application, so why review? That is, here who is passing the order? adjudication order, additional or joint commissioner or ACDC or superintendent. Who is their superior? Commissioner. So commissioner may not be satisfied with that order. So he wanted to check whether this order is correct or not. For that purpose, he will also go for review to the first appeal authority. So that is this. Department also can go for review. So registered person will file appeal and department will go for review. What is the time limit for review against this adjudication order? 6 months plus continuation of delay 1 month. So registered person going for appeal 3 months plus 1 month, and department is going for review 6 months plus 1 month. And whether pre-deposit is required to be deposited? Yes. So how much is that pre-deposit? So this pre-deposit is to be paid only by the registered person, not by the department. Department and all will not make any pre-deposit. So registered person, how much is the pre-deposit? 100% of the admitted due. So out of the total order amount, how much is admitted? So that amount we need to pay first, and plus 10% of the disputed tax. So due wise, tax, interest, penalty, everything admitted due, whereas disputed only tax. So disputed tax, how much? 10%. 10% of the disputed tax, but this 10% of disputed tax is subject to maximum 25 crores. Also one more point to remember, that is wherever we come across interest, then late fee, interest, late fee, penalty, okay, interest, late fee, interest under GST, late fee under GST, penalty under GST, or any appeal fee under GST. All these things are given only for CGST Act. CGST Act means the equal amount we need to pay under SGST Act. Equal amount we need to pay under SGST Act. So the sum of these two is only called as IGST Act. Now in the exam they have given compute late fee. Okay, now we need to do both as per CGST Act as well as SGST Act. And suppose if they give compute late fee under IGST Act, then we need to compute as per CGST Act, SGST Act. Suppose if they say compute penalty under CGST Act, only CGST Act. Compute interest under CGST Act, only CGST Act. So a description also no problem, but in MCQs only there will be a problem. So what they will ask? They will ask penalty under CGST Act, and in the options they will give penalty under CGST as well as penalty under IGST, that is 2, sum of CGST, SGST, and we will scratch our head which penalty we need to select. Both are correct only. You understood what I am telling? So for example, here subject to maximum 25 crores. Okay, suppose if the disputed tax is, say 500 crores, 500 crores is the disputed tax, 500 crores into 10%, so that is 50, but subject to maximum 25. So in option we will have 25 crores, option B 50 crores. Which is correct answer? 50 crores is correct answer. Why 50 crores is correct answer? The tax is given as 500 crores. Tax 500 crores means what? So in this 500 crores, we have CGST 250 crores and SGST 250 crores. So therefore, pre-deposit will be CGST into 10%, 25 crores, subject to maximum 25 crores. So same way, SGST 10%, 25 crores, subject to maximum 25 crores. So what is the total pre-deposit? The total pre-deposit will be 50 crores. Suppose if they say pre-deposit payable under section 107 of CGST Act, then option A, 25 crores. Okay. And suppose if they say pre-deposit payable by that person, no act reference, pre-deposit payable by that person, so 50 crores. You understood or not? So whenever they give specifically the CGST Act in the question, so then the CGST related component only you do. And whenever they give generally like interest, late fee, penalty, but they did not say which act, you understood or not, then in that case you need to do both as per CGST Act as well as per SGST Act, total it and then select the option. So descriptive not a problem. because you will clearly write CGST Act like that, so therefore there won't be any problem. But in MCQs only we will be facing this difficulty. Is it clear or not? Because last exam 129, section 129, one question came. In that 129, clearly they asked section 129 of CGST Act. Means if you write the penalty when the owner is not coming forward, 50% of the value of goods. Enough. That is correct. And some students have written, so penalty payable 50% under CGST, 50% under SGST. So this much penalty is payable. So for that, the answer is given as wrong. They have not awarded marks. Okay, why they have not awarded marks? The student has given, sir, whatever you said, that only, sir, I have written. Yes, he written correctly only, but he did overaction. What is that overaction? Question is what? CGST Act. Why are you doing as per IGST Act? If the question is as per IGST Act, you do as per IGST Act. When the question is as per CGST Act, you restrict yourself to CGST Act only. You understood? Then, so that is this. Pre-deposit not applicable in case of department appeal. 100% of the admitted due, 10% of the disputed tax, subject to maximum 25 crores. Okay, and for that reason, interest don't compute 18% under CGST, 18% under SGST. Ayya, daivame. No, no. So tax, sir said, tax into 18% CGST into 18% SGST. No. If you take CGST and compute 18%, correct. Total tax don't compute 2 times 18%. CGST tax 18%. SGST tax component 18%. That is correct. Okay. But total tax if you take and do 2 times 18% computation, gone. Okay. Rest in peace. Indirect tax exam, rest in peace. Then pre-deposit shall be 25% of penalty under section 129. That is, on section 129 order also we can go for appeal, na penalty order under 129. When we go for appeal against penalty order 129, how much will be the pre-deposit? 25% of the penalty, but only in case of first appeal. So very, very important. When we go for second appeal against this penalty order, so whether we need to pay any pre-deposit? No. Why no need to pay? Because look into the second appeal, the pre-deposit in case of second appeal is 100% of the admitted due plus 20% of the disputed tax. But here penalty, so which means we don't have to pay any pre-deposit, because penalty 10% of disputed tax, 20% of disputed tax, not penalty. So therefore here on what we are going for appeal? Penalty order. So therefore on penalty order only in case of first appeal 25%, second appeal we don't have pre-deposit at all. Then that's the reason why in the first appeal itself they are collecting 25%. When we go for second appeal against penalty under section 129, there is no pre-deposit. That's the reason why in the first appeal stage itself they are collecting 25%. Then any fee for first appeal? No. And time limit for disposal of appeal 1 year, and it is not mandatory. Then second appeal we need to make to whom? Second appeal to GST 80. Against whose order? Commissioner appeals order or additional commissioner, or there is one more authority called as revisional authority. On that revisional authority order also we will go for appeal to GST 80. What is the time limit? If assessee is going for appeal within 3 months plus 3 months, and when department is going for appeal 6 months plus 3 months, the regular time limit only. First appeal 3, 6. Plus 1 plus 1. Here 6, 3, 6 plus 3 plus 3. Okay. 3 months plus 3 months, department 6 months plus 3 months. Pre-deposit not applicable in case of department appeal, 100% of the admitted due. Sir, already we paid 100% admitted due here. This is admitted due in the first appeal. This is between first appeal to second appeal if there is any admitted due. Plus 20% of disputed tax. This is subject to maximum 50 crores. 50 crores under CGST, means under IGST it will be 100 crores. Same way here, subject to maximum 25 crores under CGST. If it is IGST, double. Okay. Then fee not applicable in case of department appeal, 1000 rupees for every 1 lakh, subject to maximum 25,000 rupees. So that is the appeal fee payable. Again appeal fee also CGST, SGST. For example, so tax on which you are going for appeal. So what is the dispute here is tax. So tax in dispute, and this tax in dispute CGST, SGST. So CGST is 14,56,000, SGST 14,56,000. Now what is the appeal fee? What is the appeal fee? 1,000 rupees for every 1 lakh or part thereof. So therefore 15,000. Here 15,000. But sir, maximum is only 25,000. That is under each act. Suppose if CGST, SGST, so it is 28,32,000 and 28,32,000 is the tax in dispute. Then what is the appeal fee? So the appeal fee will be 25,000. So maximum 25,000 under CGST, SGST, like that. Then what is the time limit for disposal of appeal? Same, 1 year, and it is not mandatory. Now third appeal we will go to whom? High Court. Against whose order? GST 80 order, if the issue is other than place of supply. And time limit, assessor department within 180 days. Within 180 days from the date of GST order, GST 80 appellate tribunal order, we will go for appeal to High Court, and plus unlimited condonation of delay. Pre-deposit and fee is as per CPC, Civil Procedure Code, and appeal to Supreme Court, fourth appeal. When appeal to Supreme Court, against whose order? Either High Court order or GST 80 National Bench order, that is place of supply. And time limit, pre-deposit and fee, everything is as per CPC. And matters relating to question of law, we can go up to Supreme Court. But if the issue is pertaining to question of fact, then GST 80. So GST 80 is the final fact finding authority. So what is the difference between question of law and question of tax? So I am selling a product, and what rate I need to pay tax? I am selling, say for example, I am selling one product by name soft serve, okay, soft serve, like ice cream only, but it is not ice cream, okay, it is not ice cream, okay, but the product name is soft serve, because only when we use dairy product it should be called as a ice cream. I am not using dairy product in that. So there are lot of ice creams which are being sold without any dairy product. So dairy product will not be there, made up of vegetable oil. So vegetable oils, using vegetable oils they make the ice cream, okay. So that is actually bad for health. Dairy element, if it is there, it is okay, good for health. So if you see quality walls, etc. and all, that will be made out of vegetable oils, okay. And so therefore I am selling a product like ice cream, but not, it is not called as ice cream, it is called as soft serve, like that, okay. And therefore whether for this soft serve the rate applicable to ice cream is 0%, but the rate applicable to any other product made up of edible oils will be 12%. So whether 12% is applicable or nil rate is applicable. So this is a question of law. Now whether a product which I am making is ice cream or not is a question of fact. You understood? Which rate is applicable is question of law. And whatever product that I am making is first of all ice cream or not is a question of fact. You understood the difference? Clear? So then question of law, question of fact. And whenever I am making sale to a related person, which rule to be taken? Rule 28. And but related person or not is a confusion. The transaction is between related person or not. So therefore question of law. Is it covered under related party transaction or not is a question of law. You understood or not? And whether recipient is eligible for full ITC or recipient not eligible for full ITC is a question of fact. Because once we go for rule 28, if recipient is eligible for full ITC, open market value is deemed to be transaction value, otherwise open market value needs to be determined. First of all, is this transaction a related party transaction as per the definition of related or not is a question of law. Okay, it is related party transaction, but recipient is eligible for full ITC or not eligible for full ITC is a question of fact. So if the recipient is eligible for full ITC, one provision. If recipient is not eligible for full ITC, another provision. Like that, question of law, question of fact. So who is the final fact finding authority? GST. And substantial question of law involved, we can go up to Supreme Court. And monetary limits for appeal. So with respect to assessee, GST, is there any monetary limit? Yes. 50,000 rupees, which means that I am a registered person. I am going for appeal to GST. The amount involved in the appeal does not exceed 50,000. Now GST may not accept the appeal because there is a monetary limit of 50,000. For 50,000 dispute and all, we cannot go to GST and waste their time. That is the meaning. For department, not yet notified. Then interest on refund of pre-deposit. Actually, whenever I go for first appeal and second appeal, I am paying some extra amount, that is 10% of the disputed tax and 20% of the disputed tax. Admitted anyhow I have to pay, I paid. But what extra I paid is 10% of disputed tax, 20% of disputed tax. Now I won the appeal. Now I will get the refund with respect to that. And what is the interest rate? 6% per annum. And from when it will be computed? Here it is not 61st day and all. So here it is from the date I deposited till the date I am getting as refund. So here no application and no 60 days etc. and all. So today I deposited, today I made a pre-deposit, from today till the date they are giving me. So interest will be computed at 6%. And what is the time limit within which the pre-deposit should be returned? That time limit they have not given, let it be, it's okay, because I am getting 6%, I don't have any problem from day one. You understood? Then there are some orders on which appeal cannot be made. Non-appealable orders can be asked for short note. What are those non-appealable orders? Number one, I want that officer only. So like that we cannot ask the appeal. So that is, there is a transfer of proceeding from one officer to another officer. Already you have been interacting with one officer. Now there is a transfer of proceeding. I need that officer only. How can you pass an order for transfer of proceedings? No. So on that we cannot go for appeal. And thereafter, so there is a EMI facility that will be given. So that is, whenever you have to pay some outstanding amount, so demand order, EMI facility will be given, maximum 24 EMIs. Maximum 24 EMIs, but department can choose any EMI. So they have given 18 EMIs, okay. But you are asking, no, I need 24 EMIs. On that you cannot go for appeal. Then imprisonment order. Imprisonment order means what? So the court will pass. This imprisonment order is not passed by the officer. Imprisonment order is passed by the court. So on that appeal cannot be made, and seizure order appeal cannot be made. So total 4 orders. Order transferring the proceeding from one officer to another officer, seizure order, and prosecution order, that is imprisonment order, and order sanctioning payment of dues in installments. Then revisional authority. Revision authority under GST. So revision authority will take up the adjudication orders for revision purpose. So whenever an adjudication order is passed by the department, so revision authority is a independent authority. So like a whistleblower, so they will be coming and taking the adjudication order for revision, and either on their own motion. But can revision authority take up the appellate order for revision? No, only adjudication order. But appellate order and all they cannot take up for revision. And revision authority may on its own motion, voluntarily or upon information received by it. So that is, one person will say, sir, whatever order that officer is passing is not correct. So maybe based on that, or on request from the commissioner, call for and examine record of any proceedings. And suppose if the revision authority considers that the decision or order passed is erroneous, in so far as it is prejudicial to interest of revenue, illegal or improper, or not taken into account certain material facts. So order is erroneous. Why it is erroneous? Maybe it is prejudicial to interest of revenue, or it is illegal or improper, or not considered certain material facts. Then in that case, the revision authority will stay such order, and after making further inquiry, pass an order enhancing, that is increasing, or modifying, that is reducing, or annulling, so that is cancelling, so the said decision or order. Then no revision in certain cases. Whenever we go for appeal against an order, then revision authority will not touch that order. So because either registered person can go for appeal against that order, or department can go for appeal against that order. Once we go for appeal, which means anyhow appellate authority will check that. That's the reason why revision authority will not touch that order. Okay. Suppose in that adjudication order, on few grounds we go for appeal, on few grounds we did not go for appeal. On those grounds on which we did not go for appeal, with respect to those grounds only, the revision authority can take up the order for revision. Order has been subject to appeal. However, revision authority may pass an order on any point which has not been raised and decided in an appeal. Then B, order already taken up for revision. That is, first I am taking adjudication, I am one revision authority, I am taking the adjudication order for revision, and on merits I did not pass any revision order, means I dropped, means according to me everything is correct. Now you are another revision authority, can you take up this order for revision? No. Okay, you understood or not? So this you can remember. So it's like na tottadu nee todakudadu. You understood? Na tottu edavadhu panna nee edhum pannakodadu. At the second point, order sought to be revised is a revision order. Okay, I took up the order, I revised it, again you cannot revise it, it is mine. Okay, I have revised it. You understood or not? Can you touch my property? How you can touch? You cannot touch my property like that. And suppose if I put kerchief on something, can you touch? No. If I have taken something, can you touch that? No. Okay, so that is the meaning of that. So what are the three cases revision is not possible? Number one, if the order is subject to an appeal, or order has been taken up for revision, or order sought to be revised is a revision order. And time limit for taking the order for revision. So what is the time limit? So appeal has been filed. If appeal has been filed, sir, if appeal is filed, we cannot do the revision. No, we can definitely do the revision, but that revision will be with respect to few points on which appeal has not been filed. So then 3 years from the adjudication order or 1 year from the appellate order, whichever is later. So 1 year from the date of order in such appeal or 3 years from the date of adjudication order, whichever is later. And suppose if appeal is not filed, so revision authority can take up the order for revision after 6 months. Why after 6 months? Because first 6 months either registered person can go for appeal or department can go for appeal. Na? So that's why not first 6 months not possible. So after 6 months from the date of adjudication order and 3 years from the adjudication order, means in the 2.5 years they can do the revision. Then period to be excluded in computing the limitation period of 3 years. That is when the issuance of revision order is stayed by the court. That is this 3 years. We have 3 year time limit. While computing the 3 year time limit, period of stay should be excluded. Also, suppose if there is some other case, similar issue is pending in the court of law. So till the time of disposal of that appeal, so the decision cannot be given, that is revision authority cannot pass the revision order. That is time spent in appeal under similar issue in tribunal to high court and high court to supreme court, that period also will be excluded. Then we have segment 15, seizure and confiscation under GST. So the seizure and confiscation under GST, as this has already been tested in November 22 exam, I don't think so a question will come on this, but for MCQ alone it will be useful. Okay, so from MCQ perspective you try to remember this, means just the penalties and if there is any other provision, time limits, etc., that alone you need to remember in this. Otherwise we don't have to remember anything else in this. So in this seizure and confiscation, there are two situations where the seizure will happen. First, search will happen in two places. One is in the premises, search in the premises or inspection in the premises. Number two is search in the transit. So whenever search takes place in the premises, then the sections that we need to refer is section 67 read with section 130. Whenever search takes during the transit, so then we need to refer to section 68 read with section 129. So that is what I have given two situations. Situation 1, seizure and confiscation of goods from place of business, section 67 read with section 130, and situation 2 is seizure of goods during transit, section 68 read with section 129. In case of situation 1, so where they will conduct the inspection or search during in the business premises of taxable person or transporter or warehouse keeper. Inspection will be carried out at these three places. And if they found out any unaccounted goods, then those goods are liable for confiscation. So what they will do under section 67, they will pass a seizure order. And after passing the seizure order, So there are two options available. So what are the two options? Option 1, pay the tax and penalty. How much is the penalty under 122 subsection 1? That is 100% of the tax or 10,000, whichever is higher. So pay applicable tax and penalty under 122 subsection 1 and the goods will be released and all proceedings will be concluded, which means that, so thereafter will there be any other proceedings? No. So it is over. And option 2, suppose if you don't want to pay the tax and penalty, then you can execute a bond. Once you execute a bond, then the goods will be released provisionally only. Means we have not yet paid tax and penalty na. So whenever we sell the goods, at that time we will pay tax and penalty. So now we don't have to pay the tax and penalty, just execute a bond, the goods will be released provisionally. But this is not final release of goods, this is only provisional release of goods. So first they conduct the search. After conducting the search, they will pass a seizure order for seizure of goods. And thereafter two options. Option 1, pay tax and penalty. Goods will be released. All proceedings are completed. And penalty will be 100% of tax or 10,000, whichever is higher. Option 2, if you don't want to pay tax and penalty, execute a bond and get the goods released. But this release of goods will be provisional. Proceedings are not concluded. Means whenever you are actually selling the goods, at that time you pay the tax along with penalty. If you are not exercising these two options, then they will pass a confiscation order. But when they pass a confiscation order under section 130, so they will give a redemption option. So still you have one more option to pay the fine. Now what and all you need to pay? Tax, penalty and fine. So what is that fine known as? Redemption fine. What is the time limit within which I have to pay this tax, penalty and redemption fine? Within 3 months. Within 3 months I have to pay this. And suppose if I am not paying within 3 months, what will happen? So if I am not paying within 3 months, then whatever goods which are already seized by the department, now the ownership also will be transferred to the department. So tax and penalty payable. Here penalty is not 129. So please change it to 122 subsection 1. Tax and penalty payable under section 122 subsection 1 along with redemption fine. If option not opted, confiscated goods shall be disposed of. And confiscation order plus redemption fine. So option to pay redemption fine within 3 months. And what is the maximum redemption fine? In case of release of goods, the maximum redemption fine is market value of the goods minus tax chargeable thereon. Means that much is the redemption fine we pay? No. Redemption fine will be fixed by the proper officer. But what is the maximum redemption fine that he can levy will be? So market value of the goods minus tax chargeable. What is redemption fine in case of conveyance? So can conveyance also be seized? Yes. So if the conveyance is in the premises and in that conveyance if we load the goods and keep, that conveyance also can be seized. And for release of that conveyance, we need to pay for release of the goods, tax payable on the market value of the goods minus tax payable thereon. For release of conveyance, it is tax payable on the goods transported therein. So that much we need to pay as maximum redemption fine to release the goods and the conveyance. So these points only you need to remember. So first thing that you need to remember is what is the time limit within which redemption fine has to be paid? 3 months. What is the penalty in case of release of goods? Penalty in case of release of goods. Here, listen properly. Penalty in case of release of goods. 100% of tax or 10,000, whichever is higher. What is the redemption fine for release of goods? Maximum redemption fine. Market value of goods minus tax payable thereon. In case of conveyance, tax payable on the goods transported therein. Clear? Next. Situation 2. Seizure of goods during the transit. Section 68 read with section 129. So here what happens, a conveyance will be carrying the goods that contains the goods liable for confiscation. A conveyance is carrying goods, but those goods are liable for confiscation. Means what? Those goods are not having proper documents or proper e-way bill, etc. And then what will be seized? Both goods and conveyance will be seized as per section 68. Now they will be giving a notice after seizure order within 7 days. They will be giving a notice. After notice within 7 days, they will pass a penalty order under 129. and after penalty order within 15 days you have to pay the penalty. Once you pay the penalty, both goods and conveyance will be released. If you are not paying penalty within 15 days from the penalty order, then the goods will be disposed of and the conveyance will be disposed of. They will adjust the penalty and balance proceeds will be returned. But in case of section 130, so balance proceeds will not be returned. Everything will be taken away by the government. You understood or not? So in case of confiscation, the ownership will be transferred to department. So will they return any amount? No. But in case of penalty also, they will dispose of. In case of penalty order also, the seized goods will be disposed of, but they will adjust towards the penalty and remaining amount will be returned to that person. Then the difference between situation 1 and situation 2, another difference is, in situation 1 we need to pay tax also, correct? Tax, penalty and redemption fine. But here we need to pay only penalty. We don't have to pay any tax. Are you understanding this? So notice within 7 days of verification of conveyance specifying below penalty, and penalty order within 7 days of service of notice, and upon payment of penalty within 15 days of receipt of order, all proceedings in this respect shall be concluded. And the said period of 15 days can be reduced in case of perishable goods. So what is the penalty that is payable? So if owner is coming forward, if owner of the goods is coming forward to claim release, for taxable goods the penalty will be 200% of tax payable. So in case of exempted goods it will be 2% of value of goods or 25,000, whichever is lower. So in case owner is coming forward, taxable goods 200% of tax, and in case of exempted goods 2% of value subject to maximum 25,000. All these are under CGST, means the same penalty will be payable under SGST. So therefore 200% of tax means 200% of which tax? CGST tax. Okay. Then release of conveyance. For release of conveyance, what is the penalty? Penalty payable for release of goods or 1 lakh, whichever is lower. So what is the maximum penalty for release of conveyance? 1 lakh. Then suppose if owner is not coming forward, means who is coming forward? Transporter. So if transporter is coming forward, for taxable goods what will be the penalty? 200% of tax or 50% of value, whichever is higher. Logically 50% of value is only higher, because what is the highest tax rate that we have? 28%. CGST is how much? 28 half, 14. 14 into 200%, 28. 28 or 50, whichever is higher. 28% also computed on value. 50% also computed on value. So definitely 50% is only higher, but we need to remember as 200% of tax or 50% of value, whichever is higher. If it is exempted goods, then 5% of value of goods or 25,000, whichever is lower, maximum 25,000. And suppose for release of conveyance it will be how much? Penalty payable for release of goods or 1 lakh, whichever is lower. And recovery of penalty by sale of goods or conveyance detained. So what is the time limit within which they will dispose it of? That is, what is the time limit within which if penalty not paid they will dispose of? 15 days. 15 days from the date of receipt of copy of order, proper officer shall proceed for sale or disposal. And how it will be sold or disposed? By way of auction. And whatever proceeds that they get, what they will do with that proceeds? First it will be adjusted towards the expenses for sale, and thereafter it will be adjusted towards the penalty. Balance amount shall be credited to electronic cash ledger of the owner of the goods or conveyance if they are registered, else it will be credited to their bank account. If they are unable to find them within 6 months, then it will be transferred to consumer welfare fund. Why they will be not able to be found out? Say lorry came, driver got down, he ran away. Okay, so then the lorry and goods got seized, and 15 days they are waiting. First notice and thereafter order, and then 15 days they are waiting. No one turned up. They did the auction, they sold it. Now the money they got, they adjusted. So no one is coming up. If anyone turns up only, we need to return that money to them. So no one is turning up, and we don't know who is the owner of those goods and conveyance, etc. So that money will be transferred to consumer welfare fund. Sir, lorry owner we can find now, sir. Goods owner also we can find. Why we should find? They should come forward. You understood or not? If balance of the sale proceeds cannot be so paid within 6 months from the date of sale, it will be deposited in consumer welfare fund. So that is about segment 15. So search seizure. So mainly what you need to remember there is with respect to that key points for MCQ purpose. Then one more point. In case of situation 2, we can execute a bond and the goods will be released. True or false? False. We don't have bond concept in situation 2. Only in case of situation 1. Okay. Then segment 16, offences and penalties under GST. So, so we have a few queries from our students. So let's see that and then move on. Does GST department have access to our bank records when the person is unregistered person? Any person for that matter, GST department is having access to bank records. So let they be registered or unregistered, etc. Will the registration provided by proper officer valid forever? Can such person after payment of liability apply for cancellation? Yes, he can. But he crossed the threshold limit. So why he will make application for cancellation? He is an unregistered person liable to pay tax. Then for this monetary limit total 50,000 or 50k under CGST, 50k under SGST, 50k under CGST, 50k under wherever we are discussing, all those limits will be 50,000 under CGST. Okay. Then that's what tax. Tax means CGST tax. Okay. Then can we appeal against the order of revision authority? Yes, we can appeal. Na? To whom we can make appeal to revision authority? GST 80. Please check. So second appeal, GST 80 against the order of revision authority. We can go for appeal. In one SM question, during current year, they are providing restaurant service 130 lakhs plus supply of labor 10 lakhs, which is within 10% limit. They applied 5% on 140 lakhs. Actually, that's a mistake in study material. Composition scheme, one question is there. In that question, for the 10% limit also, they applied the regular rate applicable to restaurant 5%. But actually, that is wrong, because that question is answered as per the old provisions. So rule 7, there is an update. So rule 7 got amended. In that rule 7, they have given that for services up to 10% limit, so we need to take the rate applicable to trader, that is 1% of taxable turnover. So that's a mistake in this study material. Then yes, fine. So we are moving on to segment 16, offences and penalties under GST. So in this offences and penalties under GST, so total 5 areas we need to understand. First, what are the offences? What are the offences that leads to penalties? And that is given in section 122, section 123, section 124 and section 125. What are the various offences that leads to penalties is given in these sections. And second, we need to know what are the offences, various offences that leads to imprisonment. Imprisonment, that is given in section 132. So offences that leads to imprisonment given in section 132. Then number 3, what are the various offences that leads to arrest? That leads to arrest. It is given in section 69. And number 4, what are the offences which are cognizable and non-bailable? Cognizable and non-bailable. What is the meaning of cognizable? The person can be arrested without a warrant and he cannot be granted bail. Means he need to be produced before the magistrate. He cannot be granted any bail. That is cognizable and non-bailable versus non-cognizable and bailable. Non-cognizable means a person can be arrested only with a court issued warrant and the arresting officer can grant the bail. So bailable, non-cognizable. All cognizable offences are non-bailable and all non-cognizable offences are bailable. So this is given in section 134. And then we have offences that leads to compounding. Compounding of offences. Compounding of offences means what? So we will not have any imprisonment. So immunity from prosecution. So if you pay the compounding fee, you will not be imprisoned. So you will get immunity from prosecution, that is section 138. So these are the 5 things that we need to know. Offences which are leading to penalties, offences that leads to imprisonment, offences that leads to arrest, and offences which are cognizable and non-bailable versus non-cognizable and bailable, and offences which are compoundable. So first we will see offences that leads to penalties, that is this. Section 122 subsection 1. So there are some list of offences. Bio discredits TFT. So what is that bio discredits TFT? B for books of accounts default. Books of accounts default means a person is required to maintain books of accounts, but he did not maintain books of accounts. Non-maintenance of books of accounts, or false books of accounts, or fake books of accounts, that is books of accounts default. I for invoice default, that is not giving invoice, invoice without supply, or supply without invoice, or supply with incorrect invoice. Then O for obstructing an officer from doing duty, and D for, that is when officer is coming for doing duty and you stopped him, you kicked him, etc. So that is obstructing an officer from doing duty. D for dealing in goods liable for confiscation. So that is you are transporting the goods liable for confiscation, storing the goods liable for confiscation, selling the goods liable for confiscation, buying the goods liable for confiscation. That is known as dealing in goods liable for confiscation. I for input service distributor default. S for supply with GST of another person. So that is input service distributor default means you are not supposed to distribute the credit, but you are distributing the credit. Or so supply with GST of another person. You raise invoice with the GST of some other person, collected the tax and kept in your pocket. Then C, collected tax not deposited within 3 months, or collected an amount as tax not deposited within 3 months. The difference between these two is you are supposed to collect tax, you collected it but not paid within 3 months. You are not supposed to collect tax, but you collected amount representing as tax and you did not pay within 3 months. That is the difference. R for registration related default, that is you are not getting registered or giving false information for registration. E for erroneous refund, you are not supposed to get refund but you got the refund. Then D, disposal of goods while detention or seizure is operational, that is goods are seized, but you have gone to that premises, you opened the lock and you have taken those goods and you disposed it off. That is disposal of goods while detention or seizure is operational. Then ITC default, you are not supposed to take the credit but you took the credit. Then tampering with material evidence. So there is some material evidence which the department has identified, you took that evidence and you swallowed it. So tampering material evidence. Then suppression of turnover. So turnover, you crossed the threshold limit but you are suppressing the turnover. TDS TCS default, you are required to deduct TDS TCS not deducted or deducted but not paid. And failure to furnish information or document. So whenever they are asking for some information, you did not submit that information. Or transport related default, that is you are transporting without valid documents. So these are the list of offences under 122 subsection 1 that leads to penalty. How much is the penalty in that case? 10,000 rupees or 100% of tax or ITC or refund, whichever is higher. And this penalty will be on whom? Taxable person. Who is a taxable person? One who is registered or liable to be registered is called as a taxable person. On that this penalty will be payable. So what is B? B, books of accounts default. I, invoice default. O, obstructing an officer from doing duty. D, dealing in goods liable for confiscation. I, in ITC default, ITC or ISD default. Okay. Then yes, supply with GST of another person. See, two C's are there. Collected tax not paid within 3 months, collected amount as tax not paid within 3 months. R, registration default. E, erroneous refund. D, disposal of goods while detention or seizure is operational. I, ITC default. T, tampering material evidence. S, suppression of turnover. T, transport TDS TCS default. Another T is transportation default. F is failure to supply information. So you have to just check in the question. So whether the particular offence given in the question, is it covered in this list? If it is covered in this list, then the penalty will be 10,000 rupees or 100% of the tax or ITC, whichever is higher. Then 122 subsection 1A. This 122 subsection 1A is on a person who is the beneficiary of, at whose instance, or who is the beneficiary of invoice default, ITC default or ISD default. Say, for example, what I did, I created 4 registrations A, B, C, D. So I paid some money to these 4 people and got their Aadhaar cards. Using their Aadhaar numbers, I got the registration, GST registration, and I identified 3 buyers, Mr. X, Mr. Y and Mr. Z, and I ensured that these people are filing their GSTR 1 and I have not filed GSTR 3B. I filed GSTR 1 of these people and I am not filing GSTR 3B. So without filing 3B, without filing GSTR 3B, and in this GSTR 1 these people are mentioned. So from there in GSTR 2B of the recipients, so ITC is reflected. Is it clear? And these people availed ITC. These people availed ITC of 50 lakhs. These people availed ITC of 50 lakhs. And here in GSTR 1, how much is the liability reported? The liability reported is 50 lakhs. Okay. And I asked these people to give some 20% to me. Okay. So as commission. So how much I got benefit? So how much is the benefit retained? Benefit retained 50 lakhs into 20%. 10 lakhs. So benefit retained is 10 lakhs. So 10 lakhs or benefit earned or amount earned is 10 lakhs. Now on this ABCD there is penalty under section 122 subsection 1 under which default? Invoice default. Invoice default. They got registered, but they have given invoice without supply of goods. So invoice default penalty will be there. And how much will be that penalty? 50 lakhs. Penalty will be 50 lakhs. So what is the tax? 100% of the tax. So 50 lakhs. Now on these people XYZ, so what is the penalty? Again 122 subsection 1. That is what default? ITC default. And how much will be the penalty? 50 lakhs. So the penalty will be 50 lakhs. Penalty will be 50 lakhs. So on suppliers penalty will be 50 lakhs under invoice default. On recipients penalty will be 50 lakhs under ITC default. But sir, on the person who is making this deal, that is on me, there is no penalty under 122 subsection 1. Because I am not doing invoice default, I am not doing ITC default, etc. But at whose instance? At my instance, if this offence is committed, which offence committed? Invoice default, ITC default, ISD default, 3 I's. You understood? So I am the person responsible for these 3 I. What are the 3 I? Invoice default, ITC default, ISD default. And who retains the benefit? Who is the beneficiary? Who is the beneficiary? I am the beneficiary of this. So on me penalty will be under section 122 subsection 1A. And how much is the penalty? How much I earned? 10 lakhs. Should I pay 10 lakhs? No, 50 lakhs. 50 lakhs is the penalty on me. You understood or not? So this person who did the offence, okay, we can forgive them. But because of whom they did the offence, so the one who created this, the mastermind behind, or the person who is the man behind the screen, so on them only the huge penalty is there. How much benefit they retain? Just 10 lakhs, but the penalty will be 50 lakhs. That is ITC, tax evaded or ITC passed on. What is the tax evaded or ITC passed on? 50 lakhs. That will be payable. So 350 lakhs government will get. 350 lakhs government will get. 150 lakhs from supplier, second 50 lakhs from recipient, and third 50 lakhs from the person who is involved in that offence as a party to the offence, or person who is retaining the beneficiary, who is the beneficiary of that offence, the beneficiary of that offence, not just the party to the offence, okay. So, person who is beneficiary of invoice default, ITC default or ISD default. Then 122 subsection 2. 122 subsection 2 is in 5 cases, that is tax not paid, short paid, ITC wrongly availed, wrongly utilized and erroneous refund on account of fraud, collusion, willful misstatement or other than fraud. If it is other than fraud, demand order will be passed under section 73. If it is on account of fraud, demand order will be passed under section 74. Now, whenever they pass the demand order under section 73, the penalty will be 10,000 rupees or 10% of the tax or ITC or refund, whichever is higher. Whereas if it is 74 case, then the penalty will be like 122 subsection 1, that is 10,000 rupees or 100% of the tax, whichever is higher. Now, so the cases where 122 subsection 2 comes and 122 subsection 1 are same, because 122 subsection 2 is applicable when tax not paid, short paid. Means tax not paid, short paid is collected tax not paid, correct? Yes. Then erroneous refund, we have 122 subsection 1 as well as 122 subsection 2. Then ITC wrongly availed or wrongly utilized, that is ITC default, which is there in 122 subsection 1 also. But 122 subsection 1 and 122 subsection 2 are mutually exclusive. So, only when the initiation of recovery is under section 73, 74, 122 subsection 2 will come. So, therefore, wherever 122 subsection 2 comes, 122 subsection 1 will not be applicable. So, mutually exclusive. So, whenever the demand and recovery is initiated under 73 or 74, so then only penalty will be payable under 122 subsection 2. Then, so tell me what is the penalty under 122 subsection 1? 10,000 or 100% of tax, whichever is higher. Penalty under 122 subsection 1A, tax evaded or ITC passed on. 122 subsection 2, 122 subsection 2, fraud case, 10,000 rupees or 100% of the tax, whichever is higher. Non-fraud case, other than fraud case, 10,000 rupees or 10% of the tax, whichever is higher. Then 122 subsection 3, 122 subsection 3 is on a person who is not directly involved in any evasion, but is a party to the evasion. So, means what? On the supporting character. For example, I am transporting the goods without valid documents and on me there will be penalty under 122 subsection 1 under transport default, but the driver who drove that vehicle will have 122 subsection 3 penalty, the party to the offence. You understood? Then next, I am supplying goods without invoice. You should have asked me invoice, but you did not ask me invoice and you are not a registered person. On you, the penalty will be under 122 subsection 3. You are a party to the offence. Because of you have colluded with me now. So, that is why penalty will be under 122 subsection 3. So, 122 subsection 1 penalty is on taxable person. 122 subsection 2 penalty is on registered person. Registered person. Whereas 122 subsection 1A penalty is on any person. Even 122 subsection 3 penalty is on any person. So, they are party to evasion, or summons were asked. So, summons are issued to appear. So, a person has been issued summons to appear before the officer, but he did not appear. If he does not attend the summons or produce the documents, then in that case the penalty will be 122 subsection 3 and the penalty will be up to 25,000, just like general penalty. Then general penalty under 125 is also up to 25,000. So just like general penalty up to 25,000, that will be payable. All these penalties are under CGST Act. An equal amount of penalty will be payable under SGST Act. Then section 123 you see. So 122 you understood, 122 1, 1A, 2, 3. Okay. Then 123 penalty is on a person who is required to furnish information written under section 150 but not furnish that information written under section 150 within 90 days. Then the penalty will be 100 rupees per day subject to maximum 5,000 rupees. Person failed to furnish an information written under section 150 within 90 days from the date of notice, then the penalty will be 100 rupees per day subject to maximum 5,000 rupees. Then next 124. 124 will be on a person who is required to furnish information under 151. So there are two things here. Information written under section 150 and power to collect data under 151. That is, if the GST department is asking bank manager to give the account details, that is account statement of a particular person, that is information under section 150. If the GST department is asking the bank manager to give the data of all the account holders whose turnover exceeds 50 lakhs in a year, that will be called as data. So that is under section 151. So if information under section 150 is not submitted within 90 days from the date of notice, then the penalty will be how much? 100 rupees per day subject to maximum 5,000. If the data is required to be submitted under 151 within the stipulated time, so if it is not submitted within that stipulated time, so then in that case the penalty will be first time offence up to 10,000, subsequent offence, continuing offence means it will be 100 rupees per day subject to maximum 25,000 rupees. And whatever information that has been obtained under section 150 and 151 cannot be used by the department without giving an opportunity of being heard, that is given under section 152. Then section 125 general penalty we have discussed. Section 126 no penalty for minor offences. What is a minor offence? If the amount of tax involved or ITC involved is less than 5,000, less than, not equal to, less than 5,000, then it is called as a minor offence, or which can be easily rectifiable and made without a fraudulent intent or gross negligence, then also it will be no penalty. So therefore this no penalty is applicable only in case of 122 subsection 3, 124 and 125. So as per section 126, proper officer is having power to not levy penalty, but in which case? 122 subsection 3, 124 and 125. And that too in which case? Situation, if it is a minor offence or if it is a mistake easily rectifiable and committed without any fraudulent intent. Then section 127, where proper officer is of the view that a person is liable to pay penalty and the same is not covered under any proceedings. For example, they want to levy only penalty, no proceeding. For example, books of accounts default, or there is registration default, etc. Then in that case penalty can be levied under 122 subsection 1 only for levying penalty, whether they need to give an opportunity of being heard. Yes, if it is covered under any proceedings, already there is a notice there. If it is assessment, already notice is there. Demand and recovery, already notice is there. So where proper officer is of the view that person liable to pay penalty and the same is not covered under any of the other proceedings, he may levy penalty after giving a reasonable opportunity of being heard. Then section 128, government may by notification waive off the penalty. Which penalties can be waived off? All penalties other than 124. Please check. 122 penalty they can waive off. 123 penalty they can waive off. 125 penalty they can waive off except 124. And even late fee we discussed na, section 47, delay in filing returns. So that late fee also can be waived off by government under section 128. Section 133, there is an officer who is engaged in this act willfully discloses the information. Officers will be in possession of sensitive data like returns data will be available. Returns contains the sensitive information. So officer should not disclose that information to any person. If the officer discloses the information, GST information about a particular taxpayer to any other person, then on that officer penalty will be payable up to 25,000 rupees or imprisonment of 6 months or both. So these are the various offences that leads to penalties. So we have completed this first part, that is offences that leads to penalties. Okay. We will take a small break and thereafter we will continue with this imprisonment, arrest and other aspects. Okay. 10 minutes enough now? Online students, if you have any queries, you just post it. After break, I will reply. Okay. What is the difference between imprisonment and arrest? Imprisonment and arrest are two different aspects. So arrest may or may not be there for imprisonment. So arrest is taking a person into custody, and imprisonment is the order which is passed by the court to serve the sentence. So therefore, if a person cooperates during the investigation, so which means arrest is not required. If a person may not cooperate, or if the officer is of the opinion that the person may escape, etc., then in that case the arrest will be made. So arrest is required to get the information from the accused, whereas imprisonment is the activity which is done by the court afterwards. So arrest and imprisonment are two different things. So imprisonment may be there with or without arrest. Then next, whether like this shortcut, if you write any half marks will be awarded. This will not be asked as a question. So which shortcut he is asking, I don't know. So biodiscredit. First of all, this question will not be asked. This question will not be asked. Write out what are the offences that are covered under CGST Act. No, they will never ask like that. They will give a situation. For that situation, we need to apply 122 subsection 1 and we need to arrive at the answer. That's how it will be. Then next, fine. So these are the, sir, whether a tax in offences and penalties, is it CGST tax only? Yes. Whatever I am referring to is CGST provisions. The same amount is payable under SGST also. Okay. Now we are moving on to offences that leads to imprisonment. So what are the offences that leads to imprisonment? Biodiscredits TFT minus ISRD STT. So whatever offences that we remember for the purpose of section 122 subsection 1, the same list of offences, minus ISRD STT. I for which I, there are three I's: invoice default, ITC default, ISD default. Which default is excluded for imprisonment? ISD default. Then yes, there are two yes, both yes are excluded. So suppression of turnover, supply with GST of another person. R for registration default. D, there are two D's: dealing in goods liable for confiscation, disposal of goods while detention or seizure is operational. Which is excluded? Disposal while detention or seizure is operational. Then total three T's are there: tampering material evidence, TDS, TCS default, transport default. So two T's are excluded. Which is retained for imprisonment? Tampering material evidence. But transport related default, TDS, TCS default is excluded for imprisonment. So therefore, for imprisonment, ISRD STT is excluded. Also collected tax but not paid within 3 months also excluded. Means which point will attract imprisonment? Collected and amount as tax not paid within 3 months attracts imprisonment. Plus attempt to commit or abetting commission of these offences. So those who try to commit these offences or those who encourage to commit these offences, on them also imprisonment will be applicable under section 132. So therefore, what is that imprisonment? So ISRD STT, first total biodiscredits TFT you need to take, minus ISRD STT, that is, so invoice ISD default, yes, suppression of turnover, registration default, disposal while detention or seizure is operational. So yes, supply with GST of another person, transport default, TDS, TCS default, and collected amount as tax is covered under imprisonment. Collected tax not paid within 3 months is excluded for imprisonment, plus attempt to commit or abetting commission of these offences. And the imprisonment table is simple. First we need to see, is it BOT offences? BOT offences. What is BOT offences? Books of accounts default, obstructing an officer from doing duty, tampering material evidence. Then first time imprisonment will be up to 6 months, or fine or both. Up to 6 months or fine or both. So which offences here? Books of accounts default, obstructing an officer from doing duty, tampering material evidence. First time up to 6 months or fine or both. Other offences that leads to imprisonment, you need to see 1, 2, 5, 1, 3, 5, greater than 1 crore, greater than 2 crores, greater than 5 crores, up to 1 year, up to 3 years, and up to 5 years, plus fine. Okay, up to 1 year, up to 3 years, up to 5 years, plus fine will be taken as imprisonment. And what if subsequent? In all cases, the subsequent imprisonment will be up to 5 years plus fine. So this will be the imprisonment table. So books of accounts default, obstructing an officer from doing duty, tampering material evidence, whatever may be the tax or ITC or refund, first time imprisonment up to 6 months or fine or both, and other offences greater than 1 crore up to 1 year, greater than 2 crores up to 3 years, greater than 5 crores up to 5 years plus fine, and minimum imprisonment 6 months. Whereas if it is subsequent imprisonment, all cases it is up to 5 years, minimum imprisonment 6 months plus fine. Now there is arrest. So we completed offences that leads to imprisonment also. Now we are discussing offences that leads to arrest. That is 3 offences. What are those 3 offences? IIC, that is 3 I's, but 1 I is not at all covered under imprisonment. So no arrest on that. So which 2 I's are covered under imprisonment? Invoice default, ITC default. Again C, which C is covered under imprisonment? Collect an amount of tax not paid within 3 months. So IIC, invoice default, ITC default, collect an amount of tax and not paid within 3 months. These 3 offences, if the amount involved in the offence exceeds 2 crore but does not exceed 5 crore, then arrest will be there. And even if it exceeds 5 crores, arrest will be there. However, if the amount does not exceed 5 crore, it is called as non-cognizable and bailable offence. If the amount exceeds 5 crores, then it will be called as cognizable and non-bailable. So whatever are the offences that leads to arrest and whatever the offences that leads to cognizable and non-cognizable is same. What are the 3 offences that leads to arrest and cognizance of offences? IIC, that is invoice default, ITC default, collect an amount as tax not paid within 3 months. If the amount exceeds 2 crores, arrest. If the amount exceeds 5 crores, then it will be called as cognizable plus non-bailable. Then if it exceeds 2 but does not exceed 5, then it will be called as non-cognizable plus bailable. Any other offence, arrest cannot be made. When arrest cannot be made, we should not call it as bailable, non-bailable, etc. But study material uses the word non-cognizable and bailable. So due to that reason, we need to remember this, no other go, for the sake of I say study material. So whenever arrest is not there, the bailability of offences shall not arise. But for I say study material purpose, we need to remember it as non-cognizable plus bailable. But actually it is wrong. It is wrong, but we need to remember this only for exam purpose. But you can write a note. When the arrest is not there, the bailability of offences shall not arise. So that is with respect to offences that leads to arrest. Then last section 138, compounding of offences. Compounding of offences is granting immunity from prosecution. So any offence under this act can be compounded by the commissioner. When it can be compounded, it can be done before or after institution of the prosecution. Prosecution means imprisonment. Before or after initiation of prosecution means, so imprisonment order is not yet passed. If imprisonment order is passed, compounding cannot be done. So before passing imprisonment order, compounding of offences can be done only on payment of compounding amount. And compounding of offences not possible first time with respect to these offences. Already I told you, if a person has been convicted, convicted means what? Imprisoned. So then compounding of offence is not possible. Or an offence has been committed under this act, which is also offence under any other law for the time being in force. Then also compounding of offence not possible. For example, it is an offence not only under GST law but also under Income Tax Act, or it is an offence not only under GST but also under Customs Act, like that. Then a person who has been blamed of committing an offence by way of obstructing an officer from doing duty or tampering material evidence or failure to supply information, these 3 offences first time compounding not possible. So 3 cases first time compounding itself is not possible. When the imprisonment order is passed, or when there is an offence which is also an offence under any other law, or 3 offences, that is obstructing an officer from doing duty, tampering material evidence, failure to supply information, means compounding not possible in that case. And in other offences, subsequent compounding is not possible. What are they? Invoice default, ITC default, collected amount as tax not paid within 3 months, these three, plus erroneous refund, books of accounts default, or any other offence where the value is more than 1 crore. In that case, subsequent compounding is not possible, means first time possible, but subsequent compounding is not possible. And what is the maximum compounding amount and minimum compounding amount? Compounding amount will be fixed by the officer, but we have limits, minimum limit and maximum limit. The minimum limit is 50% of the tax or 10,000, whichever is higher, whereas the maximum is 3 times, 150% of tax or 30,000, whichever is higher. Between these two limits, they can fix the compounding amount. So these are the provisions that we have in offences and penalties. Then segment 17, advanced ruling. So in that advanced ruling, actually for MCQ purpose only it will be relevant. So advanced ruling authority will be pronouncing a ruling, and that ruling will be with respect to certain questions. What are the questions on which we can seek advanced ruling? Remember all the index, you take the index of this book, please take the index of this book. So from taxable event till registration chapter, everything we can go for advanced ruling except place of supply, okay. From taxable event chapter to registration chapter, on all questions we can go for advanced ruling except place of supply. Whether an activity is supply or not, what is the value to be taken, what is the rate to be taken, what is the time of supply, and whether input tax credit is available or not available. So all questions we can go for advanced ruling except place of supply. So say this. So supply, eligible questions for advanced ruling: supply, classification, valuation, registration, tax liability determination, time of supply, input tax credit, applicability of notifications means exemptions. So what are the cases where advanced ruling is not possible? Place of supply, returns, payment process, penalties, appeals, etc. On that we cannot go for advanced ruling. And advanced ruling authority will pronounce the ruling. What is the time limit within which they will pronounce the ruling? 90 days from the date of application. And this authority for advanced ruling is a central level authority or a state level authority. State level authority means separate AAR is there for each state, there is no central AAR. And when application can be made, either before commencement of the activity or with respect to ongoing activity. Who can make application for advanced ruling? Either registered person or unregistered person. And what is the fee for advanced ruling? 5,000 rupees under CGST and 5,000 rupees under SGST. Can the application be withdrawn? There is no express provision related to this. And when the application for advanced ruling will be rejected? If the matter is pending in or decided by any court or tribunal, then with respect to such issue, advanced ruling will not be given. If the matter is pending in any proceedings or decided by any court or tribunal with respect to such matters, means with respect to such issues, advanced ruling is not possible. Then if the advanced ruling authority pronounces a ruling, that will be binding on the applicant and the department. Another person having the same issue also cannot rely upon the advanced ruling. And advanced ruling, authority for advanced ruling has pronounced the ruling. On that, can we go for appeal? Yes, we can go for appeal to appellate authority for advanced ruling, AAR. And what is the time limit within which we need to go for appellate authority for advanced ruling? 30 days plus 30 days. Again, the AAR also, national or state level authority, it's a state level authority. And what is the fees? First appeal, first advanced ruling authority, WR, the fees is 5,000 plus 5,000, whereas AAR, the fees will be 10,000 plus 10,000. And this AAR, appellate authority for advanced ruling, will pronounce the ruling within 90 days from the date of application. So these monetary limits and the time limits only we need to remember in this. So that will be tested for MCQ purpose. Then segment 18, demand and recovery under GST. So what are the cases where section 73 and 74 demand and order will be applicable? Non-payment of tax, short payment of tax, wrong availment of ITC, wrong utilization of ITC, and erroneous refund. 5 cases. These 5 on account of fraud, collusion, willful misstatement, suppression of facts, or contravention with an intent to evade payment of tax, then the applicable section will be 74. Suppose if it is other than fraud, the applicable section will be 73. So total 5, first 5 cases. So when this 73, 74 will be applicable, non-payment of tax, short payment of tax, wrong availment of ITC, wrong utilization of ITC, erroneous refund. These 5 on account of fraud, collusion, willful misstatement, suppression of facts, or contravention with an intent to evade payment of tax. Then the penalty or recovery will be under section 74. Means fraud case, intention to evade. Bona fide case or malified case? Malified case. Whereas bona fide case means we don't have intention to evade, then it will be 73. What is the time limit within which order should be passed in case of 74? 5 years from the due date of furnishing annual return. So in case of non-payment, short payment, wrong availment of ITC, wrong utilization of ITC, 5 years from the due date of furnishing annual return, the order should be passed. Whereas in case of erroneous refund, 5 years from the date of refund, order should be passed. And then what is the time limit within which the notice to be given? At least 6 months before the order date, the notice to be given. I am talking about 74. So 74, what is the time limit for passing adjudication order? 5 years from the due date of filing annual return for the relevant financial year and 5 years from the date of erroneous refund. And at least 6 months before this order date, the notice to be given. Means from the notice to the order, what should be the minimum gap? 6 months. We need to maintain a 6 months gap. And in case of 73, it will be wherever 5 years come, you have to replace it with 3 years. So therefore here 3 years from the due date of furnishing annual return or 3 years from the date of erroneous refund, and wherever 6 months comes, that should be replaced by 3 months. Means at least 3 months before the order date, the notice should be given, which means from the notice to the order date, there should be a minimum gap of 3 months. And whether a supplementary notice can be given? Yes, but it should be for the same ground. Supplementary notice means already notice is issued for 1 year. Now another year also same issue is there. Now, so rather than giving a different notice, for the notice which is already issued last year, a supplementary notice can be given, but the ground should be same. Means the offence that is committed in the last year should be same as the offence committed this year also. So then the supplementary notice can be given, and for all these 2 years, a single adjudication order can be passed. But this is common for both 73 and 74. Then what is the amount that will be mentioned in the order? Tip, tax, interest, penalty. What is the penalty? Penalty will be 122 subsection 2 penalty. That is in case of 74, what is the penalty? 100% of the tax or 10,000, whichever is higher. In case of 73, what is the penalty? 10% of the tax or 10,000, whichever is higher. Now in case of 73, there is a benefit of reduced penalty or no penalty. That is, if you pay before show cause notice the tax, then you don't have to pay the penalty. Tax and interest you pay before show cause notice, no need to pay penalty, or within 30 days from show cause notice, no need to pay penalty. Thereafter, if you are paying the tax, you have to pay full penalty. And in case of 74, if you pay the tax and interest plus 15% of the penalty, then remaining 85% is waived off. So how much you need to pay? Only 15% of the original penalty when if you pay before show cause notice. If you pay after show cause notice within 30 days, how much penalty you need to pay? 25%. Thereafter, within 30 days from the date of adjudication order, if you pay, you have to pay 50% of the original penalty. Beyond that, it will be 100%. So 73, before notice, no penalty. Within 30 days from notice, no penalty. Thereafter, full penalty. 74, before notice, 15%. After notice, within 30 days, 25%. Thereafter, within 30 days from order, 50%. And after order date, it will be 100% of the original penalty. Then 76 we have. 76 is amount collected as tax but not paid. Means representing an amount, representing as tax, an amount has been collected. So that recovery is not 73, 74, that recovery will be 76. So that's why while discussing this chart, I told you, so demand order under 73, 74 or 76. What is this 76 demand order? That is amount collected as tax but not paid. And is there any time limit for show cause notice? No. Even after 20 years, 30 years also they can recover that money. And no time limit for notice, but order should be passed within 1 year from notice. So whenever notice is given, from there within 1 year the order should be passed. And here the penalty will be 100% of tax. Which penalty? Section 122 subsection 1 penalty. Do you remember? Amount collected as tax but not paid within 30 days, within 3 months. So then penalty will be 100% of tax or 10,000, whichever is higher. So that amount collected as tax but not paid, 122 subsection 1 penalty. Then interest will be at the rate of 18% per annum from the date of collection till the date of payment. And what is the time limit for payment of the amount? Within 3 months from the date of order, otherwise recovery will be initiated. That is, there are 3 orders, 73 order, 74 order, 76 order. So within 3 months from the date of this order, you have to pay the tax, interest, penalty. Otherwise, the recovery will be initiated. So that is given in section 78. Then as per section 80, so whatever is the amount that is mentioned in the order, we will get installment facility. How many installments? Maximum 24 months installments. Whether it is no cost EMI or cost EMI, this is not Bajaj Finance. So there is cost EMI, which means it's like interest is payable on that EMIs. Then benefit of no penalty not applicable if the self-assessed tax is not paid. So self-assessed tax means what? Tax which is reported in GSTR1 but not paid in 3B is known as self-assessed tax. So self-assessed tax if you are paying late, so if you pay within 30 days from show cause notice, before show cause notice, we have benefit of reduced penalty na. So that benefit will not be applicable in case self-assessed tax is paid late. Then some other provisions, section 75, general provisions relating to determination of tax. Suppose if any stay is granted, so stay granted for passing an order. So then during that time order cannot be passed, so therefore that period will be excluded. Then notice issued under section 74 not sustainable in the court, then the same shall be converted to 73 notice. Means 74 notice means 5 years period they will invoke, and means for last 5 years whatever is the tax we need to pay, for that they gave a notice under 74. But in the court we argued that there is no intention to evade. Now again they will not give a new notice, the same notice which is already given for 74 will be considered to be 73. If it is 73, how many years tax can be recovered? 3 years. So rather than 5 years before tax, now 3 years before tax, within 3 years before tax only can be recovered. Is it clear? Then when the matter remanded back for fresh adjudication by court or GST, demand order shall be passed within 2 years, and proper officer shall grant adjournment for maximum how many times? 3 times. And interest is payable even if not specified in the order, but penalty is payable only when it is specified in the order. And amount in the order cannot exceed the amount in the notice. So if the notice is given for 10 lakhs, the order cannot be passed for 12 lakhs. The order should be within 10 lakhs only. In case of self-assessed tax means liability reported in GSTR1 and not paid in 3B, direct recovery can be made without giving any notice or passing any order. So direct recovery without order can be initiated under 79. And suppose if similar issue is pending in any high court or tribunals or Supreme Court, till the time of outcome of the decision, adjudication order cannot be passed. This point already we have seen in revisional order. Then section 77, tax wrongfully collected and paid, means we paid CGST, SGST instead of IGST. So we need to pay IGST and get refund of CGST, SGST. Whether we need to pay any interest and penalty? No. Vice versa. We paid IGST instead of CGST, SGST. So pay CGST, SGST and get refund of IGST. Then section 79, recovery proceedings. So what are the various modes of recovery? So either it will be deducted from the money owed from the government. So from government we need to get some refund. From that refund it will be adjusted. Or sale of goods under the control of proper officer. Proper officer will be seizing some goods now. So those goods will be disposed of and it will be recovered from there. Or garnishee proceedings, recovery from a third person. So that is from the bank account or from the tenant or from the debtor they will be collecting, that is recovery from third person, garnishee proceedings. Sale of movable or immovable property. So whenever the property is with the like attachment of property, movable or immovable property, and that will be sold off and money will be adjusted towards the tax. As arrears of land revenue by collector, that is like how collector will recover the arrears of land revenue by announcing the name of the person in that locality, so they will be recovering that. As a fine imposed by magistrate. Magistrate and impose a fine, we have to go to the prison, we have to do the work, and we need to earn the wages, and that wages will be adjusted towards the tax dues. If all these are not sufficient, through surety, we would have executed any bond or security, etc. So that will be taken. And penalty for self-assessed tax not recovered through 73 is 25,000 rupees. So whenever they directly initiate recovery, so in case of self-assessed tax, direct recovery will be applicable under 79. So means directly they will initiate recovery. In that case, the penalty will be how much? Up to 25,000. That is general penalty will be payable. Then section 81, transfer of property to be void. That is, any amount has become due from a person. So creates a charge or transfers any of his property. That is, any amount has become due from a person. When it will be due from a person? So whenever the person has been passed with an order, one order has been passed against a person, so then he should not transfer the assets to any other person, or he should not create a charge against that particular property. So when he transfers or creates a charge against that property, that charge or transfer shall be void, provided such charge or transfer is in good faith and for adequate consideration, then it will not be considered as void. Then section 82, tax to be first charge on property. That is, whenever the recovery is initiated, so that is in case of company in liquidation, etc. So the first charge will be on tax, because GST is a statutory due, so but is subject to IBC. Then provisional attachment to protect revenue. That is, if the order has been passed, then if you transfer the property, that transfer is void. Order, okay. If the order has been passed and thereafter if there is any transfer, the transfer is to be void. Suppose if you transfer the property before the date of order, that is not void. So when the notice is given and after notice, before order, then we can transfer the property to other person, so that recovery will not be initiated. But during that time, they can provisionally attach the property to protect revenue. Provisional attachment of any property, including bank account, after initiation of any proceedings under assessment or inspection, search, seizure or arrest or demand and recovery. So that is, for example, one order is to be passed on me. What I will do, if the order is passed on me, whatever property that is in my name, the government will take over the property, will sell it off. So therefore, I will transfer this property to my wife, so that government will not do anything. So, but this transfer will be void if the order is passed. Okay. Notice is given. Order is not yet passed. During that time, if I transfer the property to my wife, is that transfer void? No. So then I can do that way. Yes. That's the reason why they created another section, section 83. What it says, so during this time, that is after notice and before order, they will provisionally attach the property. But this provisional attachment will be for a period of 1 year from the date of order of provisional attachment. Means within 1 year they need to pass the order. What order? Adjudication order. Then section 84, continuation and validation of certain recovery proceedings. That is, first appeal against an order. So there is one order, on that we went for an appeal. Appellate authority enhance the amount. So it is like we go for re-evaluation and ICAI reduces the marks, like that it is. So we went on an appeal against the order and appeal authority enhanced the amount. They asked us to pay extra amount. So we went for an appeal for paying lesser amount. So they asked us to pay extra amount. Now for that extra amount, commissioner shall serve a notice for such excess amount, and appeal order can be passed for such enhanced amount without any adjudication order for that excess amount. So actually for that excess amount, again they need to pass adjudication order now, but not required, because the case is now in appeals. So just a notice if it is given, that will be sufficient. For example, order is for 10 lakhs. We went for appeal and authority wanted to increase it to 12 lakhs. Now in that case, for that extra 2 lakhs, just a commissioner gives notice, that is sufficient. Appellate authority can pass the order for 12 lakhs. Then next, there are some circulars, so related to demand and recovery. So see this, circular number 1, Mr. Amar is a supplier who is raising invoice without supply of goods to Mr. Balaji, and Mr. Balaji availed ITC and he utilized that ITC for payment of his liability. Now on Mr. Amar, there will be penalty under section, please write down, penalty under section 122 subsection 1, penalty under section 122 subsection 1, invoice default, correct? So invoice default, that is invoice default, penalty will be there under section 122 subsection 1. Okay. Will there be demand and recovery on Mr. Amar? Under 73, 74, no. Because first of all, there is any tax liability. Whether he supplied goods, just invoice is raised. So means no tax liability. So when there is no tax liability, demand and recovery under 73, 74 cannot be initiated. Ayya, 122 subsection 1 and 122 subsection 2 are mutually exclusive. So 73, 74 will come into picture only when there is a tax due against a person. So is there any tax due against this Mr. Amar? No. So that's why on Mr. Amar there will be penalty under 122 subsection 1. Now what about Mr. Balaji? Whether he availed ITC and utilized for payment of liability? Yes. So now on him demand and recovery will be under 73, 74. Because 73, 74 is applicable when short payment of tax, non-payment of tax, wrong availment of ITC, wrong utilization of ITC, erroneous refund. So therefore, he is taking ITC and he is setting off that ITC with the liability. So therefore, demand and recovery under 73, 74. Okay. Now Balaji is doing ITC default. For that penalty will be applicable under 122 subsection 1. No, because already demand and recovery is initiated under 73, 74. So penalty under 122 subsection 1 will not be applicable. Is it clear? So actually circular number 2 is also the same, but in circular number 2, they are talking about in circular number 1 from the Amar's point of view and circular number 2 is from Mr. Balaji's point of view. Okay, both the circulars are same. And so here on Mr. Amar, can there be demand and recovery under 73, 74? No. Demand and recovery under section 73 or 74 not initiated. Why not initiated? Because there is no tax liability. Now next, you understood here these two circulars. Next, circular number 3, Mr. Amar is giving invoice without supply to Balaji. Balaji is also giving invoice without supply to Charan. So first listen, please listen. Mr. Amar is raising invoice without supply to Balaji. Balaji availed the ITC and Balaji raised invoice without supply. So he created an artificial liability. For that artificial liability, this ITC has been set off. And again Mr. Charan has availed the ITC and utilized for payment of his liability. Now on Mr. Amar, there will be penalty under 122 subsection 1. What is that? Invoice default. So demand and recovery under 73, 74 not applicable because there is no liability. So only penalty under 122 subsection 1, invoice default. Then on Mr. Balaji, there is no liability. Why there is no liability? First he took the ITC and that ITC he passed on to Charan and there is no liability literally for him. So that's why on Mr. Balaji, there is no demand and recovery under 73, 74, but penalty is payable under section 122 subsection 1. 2 times he need to pay penalty. Why 2 times? Number 1, invoice default. He is raising invoice without supply. Number 2, ITC default. He took the ITC. So therefore 2 times he need to pay penalty under 122 subsection 1. Then on Charan, there will be demand and recovery under 73, 74. Why? Because he availed the ITC and utilized the ITC for payment of liability. So demand and recovery 73, 74. Can there be penalty on Charan under 122 subsection 1? No, because demand and recovery is already initiated under 73, 74. There is no penalty under 122 subsection 1. Now will you agree with me that 122 subsection 1 and 122 subsection 2 are mutually exclusive? To support that argument only, this circular is given. Okay. So this circular is amendment and definitely this circular can be tested in exam. Okay. So mark it as very, very important, guaranteed 1 4 marks question, somewhere in question number 4B or 5B it will be coming. Okay. Then next, segment 19, refunds under GST. Refunds under GST. See this. So in this segment 19, refund under GST, there is one area which is an amendment, that is refund on account of inverted tax structure. Inverted tax structure formula they have modified. So that alone is the amendment. Otherwise small amendments only we have. So what are the various cases where a person can get the refund? So first case, refund of IGST with respect to zero rated supplies. So what are zero rated supplies? Export of goods or services, supply of goods or services to SEZ. So in that case, we will get refund of IGST paid, and second one is refund of unutilized ITC. Refund of unutilized ITC we will get in two cases. What are they? Zero rated supplies and inverted tax structure. And then we have refund on account of deemed exports. Then refund of tax on account of wrong classification. Wrong classification means intrastate treated as interstate and vice versa. Then refund of balance in the electronic cash ledger. So whenever we have some excess balance in the cash ledger, that refund we will get. Then refund on account of issuance of refund vouchers. So whenever we have received the advance, we will be giving a receipt voucher. Upon refunding that advance to the recipient, a refund voucher will be given. So that is refund on account of refund voucher. So whenever we give the refund voucher, on advance already we paid the tax. So to get the refund, so we can get that refund, that is refund on account of issuance of refund vouchers. Then refund on account of provisional assessment. When the provisional assessment gets finalized, so at the time of finalization of assessment, we would have paid some excess tax on provisional assessment. So that we will get as a refund. So that is refund on account of provisional assessment getting finalized. Then refund on account of judgment or order. That is, we paid some tax and we went on an appeal. And in the appeal, the case is in our favor. So now whatever tax we paid, that we will get as a refund, that is on account of judgment or order. And 9, refund to unique identification number holder. Unique identification number holder is UN embassy, then consulate or agencies, etc. Their outward supplies are exempted. On their inward supply, whatever GST they paid, they can get it as a refund. So for that, refund to UN holder. Apart from this, any other case we can go for refund on account of excess payment of tax. Apart from the above, refund can be claimed under the grounds of excess payment of tax. These are the various situations where we can claim refund. Is it clear? Now, the first thing that we are taking, that is refund in case of zero rated supplies. So what are zero rated supplies? Export of goods or services, supply of goods or services to SEZ. In case of export, export of goods, first pay IGST and get refund of that IGST. Who will sanction this IGST refund? Customs officer. In case of export of goods, the refund of IGST is sanctioned by the customs officer. So the shipping bill itself will be taken as the refund application. Is it clear? So in case of export, the exporter may supply goods or service or both subject to such conditions, safeguards and procedures as may be prescribed on payment of IGST and claim refund of that tax. In case of export of goods, so shipping bill itself is a refund application because refund is processed by customs officer. In case of export of service on payment of IGST, regular refund application, that is RFD 1. And when customs officer is processing the refund, customs officer will verify whether these goods are really exported or not. How he will verify these goods are exported or not? He will check the document which is submitted by the person in charge of the conveyance. What is the document submitted by person in charge of the conveyance? In case of vessel, export manifest. In case of aircraft, departure manifest. In case of vehicle, export report. So first we are taking the goods to the port. So then shipping bill, we will file the shipping bill. But is the goods really exported or not? For that we need to check the person in charge document. Person in charge means a vehicle, like the conveyance. For example, vessel means captain of the ship, aircraft means pilot, or vehicle means any driver, etc. So they will be submitting one documents as to what are the goods which they are taking outside India. So that document is export manifest, departure manifest, or export report. In that the details of the goods in the shipping bill should be mentioned. So the person in charge of the conveyance carrying the export goods duly files a departure manifest, export manifest, or export report covering the number and date of the shipping bills or bill of export, and the applicant has furnished a valid return in form GSTR 3B because he has to pay tax now. First, the goods should be exported, and second, he has paid tax because we are discussing which option? First option. First option is what? Export upon payment of IGST. How to check whether GST has been paid or not? So he will check. Customs officer will check the GSTR 3B to know whether tax has been paid full. Then the customs officer will sanction the refund. Then in case of SEZ, pay IGST and get refund of that IGST. For that, we need to prove that the goods or services which are given to that SEZ is used for the authorized operations of SEZ. How to prove that these are used for the authorized operations of SEZ? For that, SEZ officer will be giving one document, so that these goods are used for authorized operations of SEZ. So that document is the proof that we are using it for the SEZ authorized operations. So supplier of goods, after such goods have been admitted in full by special economic zone for authorized operations as endorsed by specified officer or authorized officer of the zone. So therefore, proof of receipt of goods or services as evidenced by specified officer of the zone is a prerequisite for filing refund claim by DTA supplier. Is it clear? Then next, in case of export of goods, what are the options that we have? Export of goods, export of services, two options. What are the two options? Pay IGST and get refund of that IGST, or export without bond or LUT and get refund of ITC. But if it is exempted goods or exempted services, so please check that row. Exempted goods or exempted services, if it is exported, we have only one option. Which option? Option 2. That is without payment of GST under bond or LUT, because it is exempted na. In case of exempted, how we can pay GST? That's why only one option. What is that one option? Under bond or LUT, and we will get refund of ITC. In that case also, for goods, export of exempted goods, bond or LUT is not required. There is a circular, so which relaxes that bond or LUT is not required in case of export of exempted goods. Is it clear? But in case of export of exempted services, bond or LUT is required? Yes. Then next, second is refund of unutilized ITC. So in case of refund of unutilized ITC, which cases we will get refund of unutilized ITC? Two cases. So on this first option, it will be mostly theory type question only, theory type or MCQ, where in this whatever we have discussed, theory type or MCQ. Whereas here the computation based questions will be asked. Refund of unutilized ITC. What are the two cases where we will get refund of unutilized ITC? Zero rated and inverted tax structure. So what is the refund in case of zero rated supplies? Refund of ITC. So kindly make note of this. Refund of ITC in case of zero rated supplies. Refund of ITC in case of zero rated supplies. How much will be the refund? Maximum refund equals to net ITC into zero rated turnover divided by adjusted total turnover. Zero rated turnover divided by adjusted total turnover. This will be taken. Now, say this. I am purchasing some inputs X, then inputs Y, then inputs Z, and inputs X I have purchased for 1 lakh plus 18,000. Inputs Y I am purchasing for 50,000 plus 9,000. Input Z I am purchasing for 1,50,000 plus, so 27,000. And using this inputs X, we made two products, FGA and FGB. FGA is exported, whereas FGB is sold in India. FGB is sold in India. Now inputs X is exclusively used for FGA export, and input Z is exclusively used for FGB, that is sold in India, whereas input Y is commonly used for FGA and FGB. And the value of exports is, so 8 lakhs excluding GST at 12%, and FGB is 4 lakhs excluding GST at 12%. Excluding GST at 12%. Now, export of exempted goods and export of exempted services will be treated as what? Zero rated. Zero rated means again two options. What are they? Pay IGST or don't pay IGST. Okay. So now sold in India 4 lakhs and 8 lakhs. Now in that case, can you tell me how much is the refund? Come on, quickly tell me. So net ITC. What is a net ITC? So with respect to inputs X, full refund we will get. Why full refund we will get? Because inputs X is fully used for FGA. So as inputs X is used for refund equals to inputs X we will get full refund, that is 18,000 rupees we will get as refund, whereas inputs Y we will be getting 9,000 into zero rated turnover 8 divided by adjusted total turnover 12, and with respect to input Z 27,000 we will not get any refund. So therefore it is 9,000 into 8 divided by 12, that will be 6,000. So 6,000 plus 18,000, that will be 24,000. This is absolutely crap. This is shit. We should not do this way. Who said you need to do this way? You are applying input tax credit provision in refunds chapter. Okay. Only input tax credit provisions we have like this. That is exclusive used for taxable take full credit, and exclusive used for exempted don't take full credit. Partly used for taxable, partly used for exempted take proportionate credit. Refund and all is not like that. So in exam don't do this way. So this is wrong. So then how the refund will be computed? Refund will be computed as per formula. So ITC you take total ITC. So total ITC on inputs and input services, that is 18,000 plus 9,000 plus 27,000. So into what is zero rated turnover 8 divided by adjusted total turnover 12. So 18,000 plus 9,000 plus 27,000 into 8 by 12. How much? 36,000 is the refund that we will get. So refund will be 36,000. Why 36,000? So because net ITC, the formula is net ITC. Net ITC means ITC with respect to inputs and input services procured during the month. So that is all three inputs we have procured. So on that net ITC into zero rated turnover. What is the zero rated turnover? 8 lakhs divided by adjusted total turnover 12 lakhs. 8 plus 4, 12 lakhs. So therefore the maximum refund in this case is 36,000. Then, so this is one point, important point you need to keep in mind. The next one, there is something called as deemed exports. So what is this deemed exports? Generally sale to a person who is exporting goods is called as deemed exports. In case of deemed exports, so please listen, in case of deemed exports there are two options available. I am selling to you, you are an exporter, I am selling to you. So I have two options. Option number one, I will be recovering the GST from you. So when I am recovering GST from you, you can take it as ITC and you can get it as refund. Full refund you can get it, not as per this formula. Full refund you can get it. Or option 2, I will not recover GST from you and I will pay GST to government and I will get the refund. You understood or not? Now here what happens is that you have made purchase of, so input X you have purchased and used it fully for FGA which is exported, that is 5 lakhs. Input X you have paid 1 lakh plus 18,000. Input X you have paid 1 lakh plus 18,000 used in FGA, fully exported for 5 lakhs. Then input X over input Y and input Z. So input Y we are purchasing for 1,50,000 plus 27,000 and input Z we are purchasing for 50,000 plus 9,000. Input Y and input Z, that is FG, so B and FGC. So input Z is used exclusively for FGC, sold in India. Sold in India for 4 lakhs, okay, for 2 lakhs. For 2 lakhs it is sold in India. FGB is again exported and the value of export is 3 lakhs, and input Y is also used in this FGB and input Y is used in FGC also, and all these are excluding GST at 12%, excluding GST or 18% at 18%, excluding GST at 18%. Now in this case, how the refund should be computed? Excluding GST at 18%. Now if you go for only refund of unutilized ITC, so you have two different ways. So claim refund of unutilized ITC. If you claim refund of unutilized ITC, then what we will do is that we will just take total ITC. What is the total ITC? 18,000 plus 27,000 plus 9,000 into zero rated turnover. What is zero rated turnover? 5 lakhs plus 3 lakhs, that is 8 lakhs divided by adjusted total turnover 10 lakhs, that will be equals to, so 18,000 plus 27,000 plus 9,000 into 8 divided by 10, that will be 43,200. So this will be the refund of unutilized ITC that you will get. Alternatively, we can claim deemed export refund. Why deemed export refund? Whenever we are making some purchases which are fully used for export, we can claim the deemed export. Actually this qualifies for deemed export. So sale of input X is there na, that sale of input X is deemed export purchase. So deemed export purchase, so which means that on this input X we can claim the deemed export refund. Deemed export refund on input X. Deemed export refund on input X. What is the deemed export refund on input X? That will be 18,000 rupees fully we will get as refund. Then refund of unutilized ITC. Refund of unutilized ITC with respect to input Y and input Z. So what is the formula? Net ITC. In that net ITC, whether we will take all three or only 27,000 and 9,000? Only 27,000 and 9,000. So therefore we should, what is the total? 18 plus 27 plus 9? 54. So 54,000 minus, so 18,000. Why? Because already you claimed refund. Okay. Then into, what is zero rated turnover? 8 lakhs. From that 8 lakhs you should take out 5 lakhs. Why? Because already you claimed the refund. Correct. So therefore 8 lakhs minus 5 lakhs. Why 8 lakhs minus 5 lakhs? Because already we claimed the refund. Divided by, what is the adjusted total turnover? 10 lakhs. From the 10 lakhs also you should take out 5 lakhs. Why? Because already we claimed the refund. So therefore 10 lakhs minus 5 lakhs. So now you see this, 54,000 minus 18,000, 36,000. 36,000 into 3 divided by 5. 3 by 5, how much? 21,600. Therefore total refund is 21,600 plus 18,000, 39,600. So now you need to go for deemed export refund or you need to go for refund of unutilized ITC. You should go for refund of unutilized ITC because the refund is more under that. Like this also they can ask a tax planning question. Okay, whatever I have discussed, all these areas are not yet asked in exam. Okay, so 43,200 or alternatively 39,600. You need to compare this. See, not necessarily always this way you will get more. Sometimes here you may get more. You understood? So therefore, this is the way in which we need to compute. And what is this minus 18,000? 54,000 minus ITC refund already claimed under deemed export, and 8 lakhs minus turnover already on which refund is claimed, and 10 lakhs minus turnover on which refund already claimed. So this 5 lakhs and 5 lakhs and this 18,000 is known as, so refund already claimed under rule 89 4A 4B. So therefore, while computing net ITC, we should take out ITC refund under 89 4A 4B. Why? Because of this reason. You understood? Then same way, while computing zero rated turnover, we need to take out supply on which refund is already claimed under 89 4A 4B. Again, while computing adjusted total turnover, we should take out supply on which refund is claimed under 89 4A 4B. Now you understood? So what is refund under 89 4A 4B? When purchases of a registered person making zero rated supply, purchases of a person making zero rated supply are treated as deemed export. So purchases of a person making zero rated supply, input X, is treated as deemed export. So they can claim refund of GST paid ITC on such inward supply, and such refund of ITC should be excluded while computing refund of unutilized ITC on account of zero rated supply. That is this illustration which I have discussed. Understood? Then next, whether opening balance will be taken in net ITC? No. In net ITC, we will not take the opening balance. We will take only ITC availed on inputs and input services during the relevant period. Suppose if there is any opening balance, will that be taken? No. Only those inputs and input services which are purchased. Also only matched ITC will be taken. Remember, unmatched ITC will not be taken. Means this ITC will be availed. What is meaning of ITC availed? Come on. What is the meaning of ITC availed? Matched ITC minus blocked credits minus used for non-business minus used for exempted, add GST under RCM. Okay, that is the meaning of ITC availed. Then zero rated turnover. Zero rated turnover means turnover of zero rated supply of goods or services. What should be taken as zero rated supply of goods? So value of zero rated supplies made without payment of IGST minus this supplies on which refund is claimed under 89 4A 4B, or this should be compared with 1.5 times the value of such goods domestically supplied, whichever is lower. So because we may inflate the export turnover and get more refund, that's why they give. Now one more amendment also in that, that is FOB value in the shipping bill or bill of export or invoice value, whichever is lower. So what should be taken as the value of zero rated supply of goods? Value of zero rated supply of goods. Value of zero rated supply of goods. Three things should be taken, whichever is lower. What is that? First you take FOB value declared. FOB value declared. Clear? Or invoice value. Or 1.5 times similar value. Correct? Similar value, whichever is lower. Sir, what is FOB value and what is invoice value? FOB value means the price prevailing at the time and place of exportation. So which means invoice value. Suppose if the contract price is X factory contract price, means invoice value will have only the price prevailing at the factory gate. But FOB value will have the price at the exporter's factory. So what will be extra in FOB value? See here, that is factory of exporter. Factory of exporter. And this is port of export. Port of export. Now the price prevailing at the factory of exporter is known as X factory price. X factory price. And the price prevailing at the port of export is known as FOB price. What is the connection between X factory price and the FOB price? So you need to add freight and insurance and the loading charges. Is it clear? So therefore X factory price plus freight up to port plus loading charges in the port, you will get FOB price. Now suppose if the contract is X factory contract, which means so freight and loading whenever we charge extra, So that will be added in the FOB price, but it will not be added in the invoice value, correct or not? So that's why previously we used to take only FOB price, but now they are telling take the ex factory price. So whichever is lower. You understood or not? Okay, sir. What if the invoice value is CIF price, port of import. Now it is our job to deliver the goods to that place. That is CIF price. Okay. Now the contract is to deliver the goods at their port, which means the invoice value will be CIF price. Means what and all will be included in that CIF price? Ex factory price, freight, loading, and thereafter to take these goods into the ship. So there will be some freight and there will be some insurance. Now you will have invoice value as what? CIF price, but we need to take CIF price or FOB price, whichever is lower. So therefore we need to take FOB price. You understood or not? So therefore what should be taken as the value of zero rated supply of goods? This is an amendment here. This is an amendment. What should be taken as the value of zero rated supply of goods? FOB value declared or invoice value or 1.5 times the similar value, whichever is lower should be taken. Then what should be taken as the turnover of zero rated supply of services? Zero rated supply of services means, so here in case of services we can get the refund only after realizing the proceeds, or we are supplying the services, whichever is later. So invoice date or payment date, whichever is later only we can go for refund, in which case services. Now we received some payment this year. In that payment received this month, there are some advances pertaining to future supplies. So should we exclude or not? Yes, because whichever is later. So therefore payment received during the month minus advances for which supplies are made in the future, and add advances received in the past for which supplies are made in this month. That should be taken as the zero rated supply of services. Please see there. So payment received during the period minus advances with respect to which supplies are not made during the period, add advances with respect to which supplies are made during the period but received in the prior period. And adjusted total turnover means what? Total turnover, but don't take exempted supplies in total turnover. Why we should not take exempted supplies in total turnover? Because net ITC. So this ITC pertains to what type of turnover? Only taxable turnover or zero rated turnover. That's why in adjusted total turnover we should not take exempted supplies. So total non-zero rated turnover, zero rated turnover minus exempted supplies minus supply on which refund is claimed under 89(4)(a) 4(b). So this is in case of refund of unutilized ITC on account of zero rated. Then next one, refund of unutilized ITC on account of inverted tax structure. So in this case you need to determine total 5 points. Now see this. First we have some inputs which are used in two products, FGA and FGB. Even we have some input services also, and inputs plus input services. Inputs is 1 lakh plus 18,000, input services 50,000 plus 9,000. Using these inputs and input services we made finished goods A and finished goods B. Finished goods A value is 2 lakhs excluding GST at 5%, and finished goods B value is 3 lakhs excluding GST at 18%. Which one is inverted? FGA is inverted. Why FGA is inverted? What is the rate of GST on inputs? 18%. What is the rate of GST on outward supply? 5%. If the rate of tax on outward supply is less than the rate of tax on inward supply, that is known as inverted. Now you need to get 5 informations here. So number 1, first we need to know what is the ITC on inputs. Okay, what is the ITC on inputs? What is the ITC on inputs? 18,000. Inputs 18,000. Then number 2. So what is inverted turnover? Inverted turnover. Inverted turnover is 2 lakhs. And then what is adjusted total turnover? Adjusted total turnover 5 lakhs total, 5 lakhs. And then next, what is the GST on inverted turnover? GST on inverted turnover 2 lakhs into 5%, that is 10,000. And number 5, so this GST on inverted turnover can be paid using both inputs credit and input services credit, correct or not? So what is the ITC on inputs and input services? ITC on inputs and input services 27,000. Now the refund equals to, maximum refund equals to 1 into 2 by 3 minus 1 into 4 by 5. Clear here? 1 into 2 by 3 minus 1 into 4 by 5. What is 1? ITC on inputs. What is ITC on inputs? 18,000. 18,000, out of 18,000, how much is pertaining to inverted turnover? 2 lakhs divided by 5 lakhs. So now you understood this logic. Out of the ITC related to inputs, how much is pertaining to inverted turnover? Minus, so ITC on inputs 18,000, but is this 18,000 is fully used for payment of tax on inverted turnover? No, we will be using 27,000. So for payment of 10,000, for payment of 10,000 we will use 27,000. What is its proportion in 18,000? Is it clear? We use 27,000 for payment of 10,000. What is its proportion in 18,000? So we pay 10,000 using both inputs and input services. That ratio in inputs credit you need to take out. Understood? So therefore 18,000 into 2 lakhs divided by 5 lakhs is how much? 18,000 into 2 divided by 5, 7,200 minus 18,000 into 10 divided by 27, 6,667. Therefore, refund will be 534 rupees will be the refund. You understood, pa? So what are the 5 things that we need to get? Net ITC, that is ITC on inputs, only on inputs. So in case of refund of ITC on account of inverted rate structure, we will not get refund with respect to input service and capital goods. In case of zero rated, we will not get refund of ITC with respect to capital goods. In case of inverted, we will not get with respect to input services and capital goods. So therefore, we need to take ITC on inputs, inverted turnover, adjusted total turnover, then tax payable on inverted turnover, then ITC on inputs and input services. So 1 into 2 by 3 minus 1 into 4 by 5. That is out of ITC, how much is pertaining to inverted turnover, minus out of this ITC on inputs, how much proportion is used for payment of tax on inverted turnover. So that is 10,000 divided by 27,000. So that's where we will get the maximum refund 534. This is updated provision. So you need to remember this amendment. So definitely a question will come on this here. Mark my word, you will definitely get a question on this because it's a computation area. The 2 refunds, last attempt also not asked question. So there is a chance, guaranteed chance. Then next, refund of ITC is not applicable in the following cases, only one case. So because in case of duty drawback, anyhow we can take ITC on imported goods with respect to IGST paid. So duty drawback now under section 75 is only with respect to customs duty burden, not on IGST paid on import. So that point is omitted, practically irrelevant, but only one condition is there. Whenever you are exporting goods upon payment of customs duty, exporting goods upon payment of customs duty, then you will not get option 2, means you will get only option 1, that is export upon payment of IGST. So only option 1, option 2 is not possible, that is a refund of ITC not available. Then applicability of inverted tax structure to merchant exports Merchant exports means what? Exports to third parties. So whenever I am making the goods, but I am making this export through a third person, then how it will be done? This is an alternative to deemed export, okay? Because in case of deemed export, the person who is exporting should have an advance authorization, or should have a EPCG license, or should be a EOU. What if he is not having that? Then we will get merchant exports, okay? That is, I am supplying to you, you are a merchant exporter, I am supplying goods to you. I will be paying tax on this sale at 0.1%. I will be paying tax on this sale at 0.1%. So as my outward supply is 0.1%, definitely my inward supply is more tax. So therefore it will be treated like inverted tax structure and I will get the refund. Is it clear? Now you will take ITC with respect to this 0.1% and you need to export goods under which option? Option 1 or option 2? Option 2, that is without payment of IGST under bond or LUT, and you will get refund of that 0.1%. Is it clear? See that sale of goods to such third party by supplier taxable at 0.1%, and such supplier making supply to such third person can claim refund of unutilized ITC under inverted tax structure. So I will claim refund under inverted tax structure. Now such third party can avail ITC of 0.1% GST on inward supply and should export the goods within 90 days from the date of purchase invoice under which option? Option 2, that is under bond or LUT without payment of IGST. Then next one, deemed exports. So what are considered as deemed exports? Sale to a person holding advance authorization, or sale of capital goods to a person who is holding EPCG, export promotion capital goods license, or supply of goods to a EOU. So these three only you remember, fourth point is already covered in the first point itself. So three things are considered as deemed exports. What is that? Sale of goods to advance authorization holder, sale of goods to EPCG holder, sale of goods to EOU. Who is an advance authorization holder? A person who is having license to import goods without payment of customs duty or to locally procure goods without payment of GST is called as an advance authorization holder, and they will get that advance authorization from DGFT. Then EPCG is a license which is given by DGFT to a person for procurement of capital goods without payment of customs duty or local procurement of capital goods without payment of GST. To such a person, if I am selling, for me it is deemed export and supply to EOU. In these three cases, what are the two options available? Option 1, supplier shall not recover GST, means there is no burden of GST on the recipient, correct? And pay GST by utilizing ITC. So I am supplier, I am making supply to you, deemed export. I will not recover GST from you, but I have to pay GST to government. I will pay GST to government and I will get refund from the government. What is the advantage? My input tax credit will be converted into cash. So advantage is ITC is converted into electronic cash ledger. Then option 2. Option 2 is what? I will collect GST from you. I will collect GST from you. Now who will claim refund? You will claim refund. So you will claim refund under deemed export. And you know what? There is an amendment here. Even blocked credit also you can claim as refund. Means I am supplying to you which is generally blocked credit. So you can take that as ITC and you can get it as a refund. So recipient can avail ITC even with respect to blocked ITC and they can collect the refund. Understood? Then next, number 4, refund on account of wrong classification. What is this wrong classification? Intrastate subsequently held as interstate and vice versa. So refund of wrong tax paid upon payment of correct tax. So first we will pay the correct tax and then we will get the refund of wrong tax. And what is the time limit within which we need to make refund application? Within 2 years from the date of payment of correct tax. Correct tax, not wrong tax. Within 2 years from the date of payment of correct tax, because first we need to pay correct tax, then only we get refund of wrong tax. So whenever you pay correct tax, from there within 2 years you need to make application for refund. And meaning of subsequently held, either it is identified by the taxpayer or identified by the tax officer. Then refund of wrong tax paid not available if the taxpayer has made tax adjustment through issuance of credit note. That is, first I charge CGST, SGST to you and I cancel that invoice by giving a credit note, and again I am giving a new invoice for IGST, then no need to go for refund, because what I paid is correct tax only, because through credit note the adjustment has been done. Then refund is not applicable. Then refund to UIN holder. So who is a UIN holder? Specialized agencies of UN, embassy or consulate in India is known as UIN holder. Now these people, they can import goods from outside India. On import of goods they pay customs duty along with IGST. That IGST what they paid, they can get it as a refund. Same way they may procure the goods and services locally. On that, whatever GST they paid on procurement, they will pay to the supplier, and the supplier will pay to government, and from government they can get it as a refund. Why there is no import of services? Only import of goods is given, local procurement of goods or service is given. Why import of service is not there? These people are making only exempted supplies, means they are exempted from registration. Exempted from registration under section 23. So then, even though on import of service they are required to pay GST under RCM, they are not required to pay, because 23 overrides 24. So therefore, they are not required to pay any GST on import of services. Note, IGST not paid on import of services. IGST not paid or not payable on import of services. IGST not payable on import of services. As section 23 overrides, section 24. Okay. Next, how the refund will be claimed? On a quarterly basis. So quarterly basis, and what is the time limit? Previously it was 18 months from the end of the quarter, now it has been modified to 2 years from the last date of the quarter. And what is the refund application? RFD 10. Along with the refund application, they need to file a statement of inward supplies, that is GSTR 11. And UIN of recipient should be mentioned in the tax invoice issued by supplier. So that is invoice should have the recipient's UIN, and suppose if invoice is not having recipient's UIN, then the copy of the invoice should be attested by the authorized representative of the applicant. And once they make refund application in RFD 10, then an acknowledgement will be generated in RFD 2, and inward supply should have been received against a valid tax invoice, and refund not allowed with respect to a single tax invoice where the price involved does not exceed 5,000, that is less than 5,000, not equal to 5,000, which means if they are making a purchases and purchase invoice is having a value less than 5,000, they cannot take ITC with respect to that purchase invoice. Refund order shall be passed in RFD 6 within 60 days from the date of refund application. So these are the various refunds that we have. Previously we had refund to international tourist, so that is omitted, that is not there now. So international tourist in a duty free shop, so we will be selling, that concept is completely omitted, so which is not there. So therefore that refund is not available. Then we have some procedural aspects related to this refund. So see that first, what is the application for refund? RFD 1, and application for refund by UIN holder is RFD 10. In case of export of goods upon payment of IGST, the refund application is shipping bill, and other authentication is mandatory for filing refund application. Once I make refund application, acknowledgement will be generated in RFD 2, or deficiency memo will be generated in RFD 3. What is the time limit within which either acknowledgement or deficiency memo will be generated? Within 15 days. If everything is correct, within 15 days we get acknowledgement. If it is not correct, we get a deficiency memo. Now after deficiency memo, again we need to file a refund application. Now that while computing the 2 years, don't include the day we got the deficiency. We made the application till the date we got the deficiency memo. So while computing the period of 2 years, period from the date of filing refund claim till the date of communication of deficiency should be excluded. So because, say for example, the relevant date is 1st March 2022. Relevant date is 1st March 2022. And you file the refund application. You file the refund application. And that refund application is filed on 20th February 2024. Is it within 2 years? Is it within 2 years? Usually what is the time limit within which we need to make application for refund? Within 2 years from the relevant date. Is it within 2 years? Yes. After that we got a deficiency memo, RFD3. RFD3 deficiency memo we got, and that deficiency memo we got on 4th March 2024. Okay. We got deficiency memo on what? Which date? 4th March 2024. After 4th March 2024, we filed a revised refund application. Revised refund application. That revised refund application is filed on 6th March 2024. If you see from the relevant date, 6th March 2024 is beyond 2 years. But you don't have to worry, because what is the overall time limit from 1st March to 6th March? 2 years, 5 days. 2 years, 5 days. Minus from the date of original refund application till the date of deficiency memo. How many days? Here 8 days. Correct? Here 8 days and here 4 days. 12 days. If you exclude 12 days, is the period less than 2 years? Yes. So therefore the revised refund application is made on time. You understood or not? So therefore for the purpose of computing the time limit of 2 years, we need to exclude the period from the date of filing refund claim till the date of communication of deficiencies. And this point please omit. It is not applicable. In case of refund to UN holder also, what is the time limit? 2 years only. This 18 months is not applicable. It is 2 years. It is 2 years from the end of the quarter. Then time limit of 2 years is not applicable in case of refund of excess balance in the cash ledger. And what should be taken as the relevant date? Depends, sir. If you are exporting goods, the relevant date will be date on which goods are leaving India. If it is export of services, so either payment received date or invoice date, whichever is later. And in case of deemed exports, so what is the date on which return is filed by the supplier, whether refund is claimed by supplier or recipient, actual date of filing return. And in case of judgment, decree or order, the date of judgment, decree or order. And refund of unutilized ITC on account of inverted tax structure, due date of 3B. Then in case of supplies to SEZ also, due date of 3B. Then in case of provisional assessment, date on which tax is finally assessed. And in case of refund claimed by the recipient, recipient is claiming refund, so date of purchase. In any other case, date of payment of tax. And suppose if I am, please concentrate, refund of ITC on account of zero rated turnover, what is the relevant date? Refund of ITC on account of zero rated turnover, what is the relevant date? No. So zero rated turnover, let it be option 1 or option 2, both options it is the date on which goods leave India or invoice date or payment date, whichever is earlier. So only in case of inverted tax structure, we need to take due date of 3B. So export of goods, export of services, both options, and supplies to SEZ, both options, we need to take in case of export of goods, let it be option 1 or option 2, date on which goods leave India. In case of export of service, invoice date or payment date, whichever is later. And in case of supplies to SEZ, whatever may be the option, both cases due date of 3B. Only in case of refund of ITC on account of inverted tax structure, it is due date of 3B. So definitely this can be tested in MCQ, please be careful. Sir, in case of merchant exporter, refund of inverted tax structure. So therefore, when supplier is claiming refund, so it is due date of 3B. And whenever the other person is claiming refund, that 0.1%, so it will be export without payment of IGST. So that will be date on which goods are actually exported. Okay. Then refund application file can be withdrawn before issuance of provisional refund order or final refund order or payment order or refund withhold order. That is, previously this facility was not there. That is, once I make application for refund, it cannot be withdrawn, but now it can be withdrawn. But I should ensure that refund order is not yet passed. Before passing refund order, I can withdraw the application. And there is something called as provisional refund. RFD 1 is refund application, RFD 2 is acknowledgement, RFD 3 is deficiency memo, RFD 4 is provisional refund order. In case of zero rated supplies, 90% of the refund you will get within 7 days and remaining amount you will get within 60 days. Is it clear? What is the time limit within which refund will be granted? 60 days. But provisional refund in case of zero rated supplies you will get within 7 days. How much you will get as provisional refund? 90% of the refund claim. Provisional refund is possible to the extent of 90% of the refund claim only in case of zero rated supplies, and such provisional refund order is passed in RFD 4 within 7 days from the date of acknowledgement, and payment order shall be issued in RFD 5. RFD 5 is to release the refund. RFD 4 is refund. So to grant the refund. To release the refund into your bank account, payment order, that is RFD 5. And RFD 6 is final refund order. What is the time limit within which final refund order should be passed? Within 60 days from the date of application. And payment order needs to be revalidated if refund is not disbursed in the same financial year. Why? Maybe there could be some withholding of refund. So that is, if there is any outstanding demand against a person, so even though refund is due to this person, but on him the recovery proceeding is initiated. So that's why to withhold that refund, so payment order needs to be revalidated. So if there is any outstanding demand against a person to whom refund is payable, then such proper officer can pass an order for withholding the refund. And then proper officer is satisfied that refund is no longer liable to be withheld. Why? Because he would have paid money. So then he may pass the order for release of withheld, and thereafter they will pass the refund sanction order. And refund is subject to unjust enrichment. Means what? We need to prove that we have not transferred the burden to the next person. That is known as subject to unjust enrichment. How to prove that refund is subject to unjust enrichment? For that, if the refund amount does not exceed 2 lakhs, self-declaration. If the refund amount exceeds 2 lakhs, we need to file a declaration certificate from a CA or CMA. But neither declaration nor certificate is required in 5 cases. What are those? Refund of IGST paid on export of goods or services, refund of unutilized ITC on account of zero rated or inverted tax structure, refund arising on account of refund voucher, then wrong classification or excess balance in cash ledger. This can be asked as a short note question. So in 5 cases, so we don't have to prove unjust enrichment. One is refund of IGST paid on export of goods, not zero rated supplies, which means in case of supplies to SCZ upon payment of IGST, whether we need to prove unjust enrichment? Yes, because in the first case it is only export of goods. In the second case, zero rated, all cases zero rated or inverted tax structure, refund of ITC, option 2. In case of option 1, only for export of goods or services, no need to prove. But in case of supplies to SCZ, we need to prove. But in case of option 2, we don't have to prove unjust enrichment. Then refund voucher, and then wrong classification, then balance in the cash ledger. Now what if we fail to prove that refund is subject to unjust enrichment? What will happen? This money will be transferred to consumer welfare fund. If an applicant fails to prove that there is no unjust enrichment, such refund due shall be credited to one fund. What is that fund? Consumer welfare fund. And whatever income arising out of investment in that fund is also deposited in that fund. And one committee will be appointed for the purpose of utilization of that fund, and that fund will be utilized for what purpose? So 50% of the amount credited to fund or 25 crores, whichever is higher, that is, there should be minimum, see this, provided the availability of funds for consumer welfare activities is greater than 25 crores. So therefore, first we need to see what is the balance. Opening balance is 8 crores and deposited is 40 crores. Okay. Then what is the closing balance? 48 crores. Now from that 48 crores minus 25 crores. What is the difference? A, 48 minus 25, 23 crores, or B, 50% of amount deposited, 20 crores, whichever is higher. Means how much we can use? 23 crores we can use. Is it clear? So, provided that availability of funds for consumer welfare activities is more than 25 crores. Okay. Sorry here, whichever is lower here. Sorry. It is not whichever is higher, whichever is lower, because 50% subject to the condition that there is 25 crores in the fund. Okay. So, 23 or 20, whichever is lower, so they can use 20 crores. So, this can be, this is not yet tested here, consumer welfare fund not yet tested, one attempt also they have not asked, but this is there in study material, so that is why I have given. So, then segment 20, liability to pay tax in special cases, that we will see after break. Okay. So, we will meet at 2:20. Yes. Okay, say this. So there are two queries. Three limits needs to be compared for total zero rated supply of goods or only for deemed exports. In case of zero rated supply of goods, we need to take the three limits. That is, we should take, this three amounts. So FOB value declared or invoice value or 1.5 times the similar value, whichever is lower, we need to take for value of zero rated supply of goods. And then refund of unutilized ITC in turnover of zero rated. Yes. So bond or LUT is option. So in this case, bond or LUT without payment of GST under bond or LUT is the option. But even if the bond or LUT is not executed, it is okay. That is the meaning of that. It does not mean, so refund we will not get. No need to execute the bond or LUT, even then we will get the refund of unutilized ITC. The option is refund without payment of GST under bond or LUT. But even without executing the bond or LUT, we will get the refund in one case. What is that? Zero rated supplies, that is export of exempted goods. Then next segment 20. Segment 20, miscellaneous provisions. In this miscellaneous provisions, we have liability to pay in special cases as per section 85. So whenever there is transfer of business, both transferor and transferee jointly and severally liable. So for example, there is a date from which from today there is a transfer of business from A limited to B limited. Now before the date of transfer, if there is any dues, not only A limited but also B limited jointly and severally liable. With respect to the date of transfer, after the date of transfer, if there is any GST dues, who will be liable to pay the GST dues? Only transferee. So transferor plus transferee jointly and severally liable for pre-transfer dues or liability. Then section 86, liability of agent and principal. Principal and agent jointly and severally liable when agent is making supply on behalf of principal. So if agent is not acting on behalf of principal, then only principal is liable. If agent is acting on behalf of principal, both principal as well as agent jointly and severally liable with respect to the dues which the agent has to pay. Then section 87, liability in case of amalgamation or merger of two companies. So usually what happens is that in principle two companies will agree for merger, but the effective date of merger will be as and when the court gives the order of merger. So up to that point of time, if there is any transactions between those two companies, they are treated as transactions between different persons only. So even though they are in principle agreed for merger, but they are treated as two separate undertakings or two separate entities only till the date of order of merger. So order or amalgamation or merger passed on a date but effective from an earlier date. For GST dues, two companies shall be treated as distinct, that is not much till the date of order. Then section 88 talks about liability in case of a company in liquidation. Is it a private limited company or public limited company? You need to check. If it is a private limited company which is liquidated, still the dues of that private limited company can be recovered from the directors of that private limited company who were the directors before the date of liquidation of that private limited company. From those directors the liability can be recovered. Whereas if it is a public limited company which is getting liquidated, one official liquidator will be appointed. That official liquidator should notify his appointment within 30 days. Within 30 days, he need to notify his appointment to the commissioner, and the commissioner will notify the dues against that company for which he is appointed as liquidator within next 3 months. So then he need to keep that into priority payments because GST liability is having first charge na at the time of liquidation. So he need to keep that as priority payment for making the payment of GST. And here these provisions are subject to IBC because IBC will always override any provisions of the laws. So due to that reason, GST provisions wherever we are discussing, that is subject to IBC. If IBC is initiated, we need to follow whatever is there given as per IBC. Then section 89. So liability of directors of a private company. What is the difference between section 88 and section 89? Section 88 is liability of a company in liquidation. So, but 89 is not into liquidation, it is continuing, but the private limited company has to pay the dues. Then also the directors are jointly and severally liable for paying the dues. So, if the company is private limited company, all directors shall remain liable jointly and severally, even if the private limited company is liquidated or not liquidated. Any dues that the private limited company is required to pay, all the directors are jointly and severally liable. However, if a private limited company is converted into public limited company, from the date of conversion, director shall not be liable, because public limited company directors are not liable for payment of dues of public limited company. Only in case of private limited company we have that option. Then liability in case of partners of a firm. Both firm and partners are jointly and severally liable for the dues. However, the retiring partner is liable for the dues till the date of his retirement if he gives a notice of his retirement to the commissioner within 1 month from the date of his retirement. If he is not giving the notice of his retirement within 1 month from the date of his retirement, then till the date of his retirement, that is till the date he gives the notice of his retirement, he is liable to pay the dues. For example, 1st March he retired, means by 31st March he need to give the notice of retirement. If he gives a notice of retirement by 31st March, means up to 1st March only he is liable for the dues. Suppose if he gives a notice of retirement on 31st May, then till 31st May, even though it is after his retirement, he is liable to pay the dues of that particular partnership firm. That is this. Then section 91, liability of guardians or trustees. Suppose for a minor or an incapacitated person, one guardian is appointed, or for a trust, one trustee is appointed. So now whatever liability that the minor or incapacitated person or the trust has to pay, that will be liable to be paid by the guardian or the trustee. So then liability of court of wards. So court of wards, when it is appointed, just like how we have guardian appointed for a minor, in some states, so there is a court of wards which government will be appointing. So one administrator general or official trustee or any receiver or manager will be appointed by government under the court of wards. So now that particular person who is appointed, because say for example, one rich person dies and he is having one minor kid, and there is no other guardians for him, and even if guardians are there, but government may come forward and using the provisions of court of wards, they will appoint one officer. So that officer will look after all the assets of that particular minor till the time that minor becomes major. So now that official trustee or administrator general or manager will be liable to pay the dues of that particular minor person. Then section 93, in case of death of a person, what is the liability of legal representatives? So legal representatives, are they continuing the business or not, we need to check. If they continue the business, legal representatives will remain liable. So whatever may be the amount that the business has to pay, that is the sole proprietor has to pay, so the legal representative is liable to pay the entire amount if they continue the business. If they are not continuing the business, then the legal representatives are liable to pay the dues to the estate inherited, to the extent of estate inherited. Say for example, now one person is dead and his son has inherited 3 lakh rupees, but the dues of that person is 50 lakh rupees GST dues. So therefore his son has to pay only to the extent of 3 lakhs. And suppose if the business is continued by his son, so then entire 50 lakhs is payable by his son. That is the point. Then whenever HUF or AOP partition of assets among the members, then each member will be jointly and severally liable for the dues. So even after partition, so before the date of partition, if there is any liability for the HUF, even after partition, the members of the HUF is liable to pay the dues of that HUF. Same way AOP. So AOP also got divided. So first they formed a joint venture, and as a joint venture they did some business, and in that business some dues are there. Now the joint venture is terminated. Now still the members of the joint venture are liable to pay the dues of that joint venture. That is this. Then partnership firm got dissolved. Whether the partners are jointly and severally liable for the dues? Yes. All partners will remain liable jointly and severally. Termination of guardianship and trust. Now till the time minor is there, guardian will pay. Now minor became major. Now in that case, with respect to the date before minor became major, with respect to those dues, whether that major person, minor who become minor to major, whether he need to pay or his guardian needs to pay, guardian. Even after termination of guardianship and trust, guardian and trust will remain liable. Then as per section 94, if a partnership firm or HUF or AOP business discontinued, then can the assessment be still completed? Yes, assessment can still be completed even if the business is discontinued. Suppose if there is any change in constitution, this is one stupid provision, all the partners and members are jointly and severally liable, which means newly admitted partner is also liable for the dues of the partnership firm before the date he is admitted into the partnership firm. Okay. For example, a person is admitted into the partnership firm in 2023. The partnership firm is started in 2020. So 2020, 21, 22, 23, whatever is the dues, the newly admitted partner in 2023 is liable. So because in case of change in constitution, all the partners and members will remain liable jointly and severally. Suppose if the partnership firm HUF or AOP dissolved, then also partners or members will remain liable jointly and severally. So these are the points which can be tested in MCQs mainly. In MCQs, how they will give is that 4 statements they will give. A, 1, 2, 3, 4. Option A, which of the following statements are correct? Option A, 1 and 2. Option B, 3 and 4. Option C, 1, 2, 3, 4. Like that they will create. So the true or false statements like MCQs they will create, there it will be useful. And then next concept in segment 20 is e-way bill. Electronic way bill, or in short e-way bill, is a document required only in case of movement of goods, and that too when it should be generated before movement of goods. Whether e-way bill is required in case of exempted goods? No. So e-way bill is required only in case of taxable goods. Even in case of non-taxable goods, e-way bill is not required. Then what is the limit for e-way bill? What is the limit for e-way bill? 50,000. While computing 50,000, should we include GST or no need to include GST? Yes, we need to include GST. However, in 2 cases, even if the value of invoice does not exceed 50,000, e-way bill is necessary. What are those 2 cases? Job work and handicrafts. In case of job work and handicrafts, e-way bill is required even if the value does not exceed 50,000. Then e-way bill has 2 parts. So part A comprises of details of supplier and invoice details, etc. and part B comprises of transport details. Every e-way bill generated will have a validity. What is the validity of that e-way bill? Once e-way bill is generated, so depending upon the distance, so that distance will be automatically computed. We give the starting point and the ending point, starting point pin code and ending point pin code. Based on that, the distance will be calculated and we can rectify. If there is any change in the distance, we can rectify that. So depending upon the distance, a validity will be counted. The validity of e-way bill is 1 day for every 200 kilometers or part thereof. Suppose if the distance traveled between 2 places is 480 kilometers. 480 kilometers means the validity of e-way bill will be 3 days. And which means within that 3 days the distance should be completed. And in case of over dimensional cargo means the tail of the cargo is big, that is big lorry, like 8-10 wheels will be there. So this airline parts or turbines, etc. and all will be transported. So these over dimensional cargoes are multi-mode transportation where one leg of the journey is by vessel, ship, okay, waterways. Then in that case the validity will be 1 day for every 20 kilometers or part thereof. So over dimensional cargo or multi-mode transportation in which one leg of the journey is by ship, 1 day for every 20 kilometers or part thereof. In any other case, 1 day for every 200 kilometers or part thereof. And the validity of this e-way bill can be extended. Yes, it can be extended after expiry of the validity within 8 hours. And always e-way bill will expire by when? Midnight of the day. So why? Because the validity will be counted from the midnight of the day in which it is generated to the midnight of the next day. For example, if e-way bill is generated today morning 8 o'clock, the validity will be counted 1 day from today midnight to tomorrow midnight as 1 day. which means always the validity will expire by midnight. So within 8 hours, means next day 8 AM, the e-way bill needs to be renewed. And suppose if the e-way bill is generated today night 10 PM, so then it will be counted, the validity will be counted from today night midnight, today midnight to tomorrow midnight. So in a day, any time the e-way bill is generated, so midnight of the day to next day midnight will be counted as one day. Then FAQs on e-way bill. So when e-way bill is not required in case of non-motorized vehicle, that is bullock carts, etc. So non-motorized vehicle, e-way bill is not required. And goods transported from customs port, airport or land customs station. In case of import or export by seaways, the place where the import export terminates is known as customs port. And in case of airways, the place where the terminating point is airport. Like that, if the goods are imported by vehicle, the terminating point is known as land customs station. From this place to air cargo complex or inland container depot or container freight station. That is the place, container freight station and air cargo complex is a place where container stuffing and destuffing will happen. That is, we will open the containers and segregate and aggregate that. And then inland container depot is a deemed port. So in a place where there is no port, inland container depots are established for the purpose of customs clearances. So therefore, these movement of goods are under the control of customs. Even when the goods are taken, so to customs warehouse, so that transport is also under customs supervision or customs seal. So therefore, for the second point and third point, what we can remember, that is, if the goods are moving and that goods are under the control of customs, e-way bill is not required. Then transit cargo to Nepal and Bhutan. So in exemptions, we have studied that Nepal and Bhutan are landlocked countries. Any service in relation to transit cargo to Nepal and Bhutan is exempted. Now e-way bill is also not required with respect to this transit cargo to Nepal and Bhutan. Then movement of goods for Ministry of Defence, because if Ministry of Defence is transporting goods, and if you know e-way bill what goods they are transporting, which place to which place, everything and all, then we can stop that vehicle and we can steal that arms, ammunitions, Kalashnikov, you understood? So therefore that should not be there, na? So that's why, so Ministry of Defence, when they are transporting goods, the e-way bill is not required. Then empty cargo containers are being transported. There is nothing inside, just an empty container. So for that, why e-way bill is required. Then consignor transporting goods to or from between place of business and a weigh bridge for weighment at a distance of 20 kilometers accompanied by a delivery challan. That is, usually to weigh the goods which are loaded in the truck. So first the truck will be taken to the weigh bridge to know the weight of the truck. So anyhow no goods are there inside the truck, so e-way bill not required. Now the truck will return to the factory. Now we load the goods into the truck, and now the truck will be going to the to the weigh bridge to know what is the weight of the truck, because weight of the truck with goods minus weight of the truck without goods is the weight of the goods. So now second time when the truck is going to the weigh bridge with goods, so that requires e-way bill or not required if the distance is 20 kilometers. If the distance is beyond 20 kilometers, e-way bill is required. Then goods being transported by rail, where the goods belongs to central government, state government or local authority. What is the difference between 8th point and 5th point? Ministry of Defence, whatever may be the mode, e-way bill not required, and in case of central government, state government, local authority, only by rail. Then goods specified as exempt from e-way bill requirement in respective state or union territory GST rules. So like state wise also they have given some flexibility for fixing the goods. So in case of those goods as determined by the states, e-way bill is not required, and central government has specified some goods. So that is LPG for supply to household or non-domestic exempted category customers. So which means, so transportation of LPG, so sorry, cylinders. So that to which type of cylinders? That red color cylinders. So blue color cylinders requires e-way bill, and that too other than dealer of cylinders. So suppose if dealer of cylinders is transporting the cylinders, even red color cylinders also that requires e-way bill. Then kerosene oil sold under public distribution system, PDS, ration shops kerosene oil is distributed, that postal baggage, Then natural or cultured perils, jewelry, goldsmith and silversmith wares. Why? Because if these goods we know na e-way bill, so then money heist season 6 will happen. You understood? Correct or not? We will stop that vehicle. So one attempt, okay fine, we will leave that attempt. So we will stop that vehicle and we will take usually this GRT, Kalyan Jewelers etc. and all transporting gold from one place to another place, gold jewelry. Definitely that truck will have lots of gold, correct or not? So we can plan and we can stop that truck and we can loot that gold and somewhere we can go and settle down outside India. So CA and all not required. Why we need? So we will give employment to various people. So that's the reason why e-way bill is not required in this case. And used personal and household effects. So like relocating the house from one place to another place. So for transporting of that personal or household effects also e-way bill not required. Then next, whether e-way bill is required if movement of goods is not for supply. Let it be for supply or without supply, e-way bill is required if it is taxable goods. It should be taxable goods. So for example, goods sent on job work. Goods sent on job work, it is not supply, but even then e-way bill is required. Then from sale on approval or on return basis, it is not supplied today, but even then that requires e-way bill. If the product is taxable product, that requires e-way bill, whether it is under supply or not. Whether 50,000 limit is for taxable goods or exempted goods, only for taxable goods. Suppose if in a document both taxable goods and exempted goods are there, take out exempted goods and see the value of taxable goods. If the value of the taxable goods exceeds 50,000, then e-way bill is required. Then while computing invoice value, whether GST to be included or to be excluded, GST to be included. Who will generate e-way bill? Registered person who is causing movement of goods. If the supplier is registered, supplier will generate e-way bill. If the supplier is unregistered and the recipient is registered, the recipient will generate e-way bill. If both are unregistered, the transporter will generate e-way bill. Else, supplier or recipient by enrolling as citizen of India also can generate e-way bill. Whether transporter is required to generate if supplier has not generated because invoice value does not exceed 50,000. If invoice value does not exceed 50,000, supplier will not generate e-way bill. Say you are a transporter. There are 10 suppliers and these 10 suppliers goods are being transported by you in one vehicle. Now each and every supplier has not generated e-way bill because the value does not exceed 50,000. But cumulatively if you see all these together carried in the transport, that is vehicle, exceeds 50,000. So definitely e-way bill is required. Transporter should generate the e-way bill as form EWB1 or EWB2 where all the consignments in the conveyance individually means that is each invoice or delivery challan is less than or equals to 50,000, but in aggregate that is all documents put together exceeds 50,000 rupees. Then blocking of e-way bill. E-way bill is e-way bill generation will be blocked if a person has not filed two consecutive returns, which returns GSTR1, GSTR3B or CMP 8. If it is not filed for 2 consecutive tax periods, then e-way bill cannot be generated. And e-way bill generation is blocked only with respect to outward movement of goods. Means, suppose if I have not filed returns for 2 consecutive periods, with respect to my inward supplies, whether e-way bill can be generated? Yes. Only with respect to my outward supplies, e-way bill will be blocked. However, e-way bill can be generated in respect of inward supplies of the said registered person. Then some other points, in case of bill to ship to transaction, how many e-way bills are required? One e-way bill only. Even though there are 2 supplies, one between original supplier and the billing address, second between billing address and the shipping address, but only one e-way bill is necessary. And multi-vehicle updation is possible in e-way bill, means up to some distance in one vehicle and thereafter in another vehicle, no need to generate a new e-way bill. In the same e-way bill, part B we can update the vehicle number. And part B should be updated within 15 days from the date of updation of part A, which means, so that is Part B is vehicle details. So part A we updated, means invoice prepared. Goods are handed over to the transporter. Now you need to start transporting the goods. Not necessary that today you will transport the goods. You may transport in 3 days, 4 days also. Because depending upon the availability of the vehicle, climatic conditions, etc. But what is the time limit within which you should start the transportation? 15 days from the date of completion of part A. Means part B should be updated within 15 days from the date of updation of part A, and once you enter part B, then only e-way bill can be generated. And once e-way bill can be generated, thereafter any number of times you can change the part B details. Is it clear or not? Then e-way bill should be accepted by the recipient within 72 hours from the generation or delivery of goods, whichever is earlier. What if the recipient is not accepting? Deemed to have accepted. Deemed to have accepted means it is like he purchased those goods. And part B may be updated by supplier, recipient or a transporter. So if the goods are transported in my own conveyance, I will update the vehicle details. If it is recipient's conveyance, recipient will update. Suppose if the goods are handed over to a third party transporter, the third party transporter will update the part B. So see this, movement of goods, if it is taxable goods, under supply, so tax invoice plus e-way bill. If it is taxable goods without supply, then it is delivery challan plus e-way bill. If it is exempted goods, whether e-way bill is required? No. But the goods should accompany bill of supply or delivery challan, depending upon whether it is under supply or without supply. Then third area is anti-profiteering. So already we discussed when there will be anti-profiteering. So whenever a person has increased the profit, how we increase the profit? By not passing on the benefit of reduction in rate of tax or benefit of ITC to consumers by commensurate reduction in price. So supplier should pass on the reduction in rate of tax or benefit of ITC to consumers by way of reducing the price. If he is not doing, then he is making a profiteering, and then in that case National Anti-Profiteering Authority may by order ask the person to reduce the price or impose a penalty which is equals to 10% of the profited amount, or return the amount to the persons along with interest at 18%, or cancel the registration. And this Anti-Profiteering Authority will be having the validity till 5 years from the date on which chairman enters upon his office. So chairman entered upon his office on 1st November 2017. So plus 5 years. So plus 5 years is 1/11/2022. So actually yours will be the last attempt where this anti-profiteering provisions will be tested. So because Anti-Profiteering Authority as on November 2022 is dead, and they have given these powers to Competition Commission of India. For November 23, this area there will be a change. So yours will be the last exam where they will ask. So mostly they will ask, what are the powers of Anti-Profiteering Authority? So you have to write this. The authority may order reduction in prices or imposition of penalty or return the amount not passed on along with interest and cancellation of registration. Then affected consumers may file an application in prescribed format before the Central Standing Committee on Anti-Profiteering if profiteering has all India character, or before the state level screening committee if profiteering is of local in nature. Then next we have fourth area, last area in segment 20, that is GST Practitioner. So this GST Practitioner, what are the activities that can be done by a GST Practitioner? Remote here may be asked, okay. What are the activities that can be done by a GST Practitioner? So they can apply for registration, and they can file the returns, and they can act as an authorized representative, and then they can make an application for refund or make payment of taxes. These four. Plus they can furnish the details for generation of e-way bill, data entry, e-way bill. Then they can enter the details of ITZ4, that is goods sent on job work, received from job work, and they can file an application for amendment or cancellation of enrollment under Rule 58. What is that? Unique enrollment number. We discussed now. every transporter and warehouse keeper, even though they are not required to get registered, they need to generate they need to get a unique enrollment number, that unique enrollment number. Then file an intimation to pay tax under composition scheme or withdraw from the said scheme. So these are the 8 activities that can be done by a GST practitioner. What are the eligibility conditions for becoming a GST practitioner? First, they should be citizen of India and they should be a person of sound mind, and they are not adjudged as insolvent, and they are not convicted by a competent court for an offence with an imprisonment not less than 2 years. Okay. So not convicted by a competent court for an offence with imprisonment not less than 2 years means imprisonment should be less than 2 years. Okay. Yes, less than 2 years. Okay. But greater than 2 years they cannot become GST practitioner. Okay. So less than 2 years, if they go to jail and come, yes, we can give them as GST practitioner. And who is responsible for the correctness of the details particulars furnished by GST practitioner? Registered person. So before GST practitioner furnishing any details in the portal, it should be made available to the registered person, and the registered person will verify and will tell okay, and then it will be uploaded. Okay. I don't know. The registered person, the responsibility for correctness of any particulars furnished in the written or other details shall continue to rest with the registered person on whose behalf such written and details are furnished. Any statement furnished by GST practitioner shall be made available to the registered person on the common portal. For every statement furnished by GST practitioner, a confirmation shall be sought from the registered person over email or SMS. And therefore, the registered person before confirming should ensure the facts are correct. Then he can file, no. However, failure to respond request for confirmation shall be treated as deemed confirmation. Okay. So we say I love you. The other person keeping quiet. Deemed confirmation. Then this GST practitioner shall prepare all statements with due diligence and affix his digital signature on the statements. And if the practitioner is found guilty of misconduct, sir, he will be terminated, sir. Yes. His enrollment will be cancelled. Imprisonment? No imprisonment. No, nothing. So just his enrollment will be cancelled. Suppose if it is CA, he will be sent to prison also. Okay. And a show cause notice would be issued to him in PCT 3. So these are the provisions related to GST practitioner, and we completed GST fully. Okay. And so I just wanted to discuss few questions. MAY23. So few questions related to GST we will see. In that, so one good question is there which is asked in November 19. So for 14 marks, so this question we will do. So this PDF MAY23 already there in my website. So in downloads you can check that, it's there. If you have solved workbook, then I have given the reference of the solved workbook also. Question number and page number reference is also given if you have the solved workbook. If you don't have the solved workbook, you can download that PDF from the website. Okay, it is there. Full PDF of solved workbook not there. This MAY23 questions is there. Okay. So see this question. Sukhdev is a mining engineer. He crossed the threshold limit for registration under GST law and is duly registered in the state of Maharashtra. He effects the following transactions in the month of March 2019 and wants you to compute the tax payable in cash. He has filed bond or LUT to claim benefits from zero rated supplies. The following are the particulars furnished by him. Number 1, Sukhdev, being an operating member in the mining and exploration services at Mumbai High, has provided certain services to the joint venture in which he is also a participant. So he is a leaseholder, mining leaseholder. and he has entered into joint venture with Mumbai High, okay. So that is one entity, has provided certain service to joint venture in which he is also a participant, and he believes that the consideration received from the joint venture is cost petroleum and not taxable. So here we should see that is it a contract with government? Is this a contract with government? No. So if it is a contract with government, then the cost petroleum will be exempted. So we discuss services provided by government to business entity, in that share of profit petroleum is exempted, and in such a contract with government, if the cost petroleum, recovery of expenses from the joint venture, that is exempted. But is this a contract with government? No, it is not given. So point number E you see, he gets a portion of the petroleum silt as a part of compensation while exploring the petroleum reserves in Bombay High, which as per contract with the government is part of cost petroleum. This is exempted. As this is contract with government, the cost petroleum will be exempted, but this one is not a contract with government, so therefore it will be taxable. Then, so they are asking compute so compute the GST payable, and here we need to take CGST, SGST, IGST, which means we need to also apply place of supply provisions. So now this is what mining and exploration services. Mining and exploration services, so we have any specific provision? Yes, it is a service in relation to immovable property. Correct? Mining exploration will be done where? With respect to a oil rig. Correct here? So service in relation to immovable property. Where is that immovable property located? Section 12 or section 13? Section 12. Where is that immovable property located? That immovable property is located in Mumbai. So therefore this person is located in Maharashtra. Okay. So Mumbai is also in Maharashtra. Therefore it will be coming under intra. So chargeable to CGST, SGST. So 12 lakhs chargeable to CGST, SGST. How much? Supply of services are taxable at CGST 9%, SGST 9%. So it is supply of goods or supply of services? Definitely supply of services. Clearly given in the question itself. Services. So 9%, 9%. Understood here? First transaction clear? And even this transaction also clear? E. So for that E point, what is the answer? Compensation received in the form of petroleum silt, which as a part of contract is cost petroleum, that is exempted. Then next one, he has purchased certain machinery from outside the state to render services to joint venture at Mumbai High. This is inward supplies. On these inward supplies, GST is paid, which can be availed as ITC and set off against the GST payable. So therefore it should not come under the outward supply liability, it should come in the input tax credit. So inward supplies. In that inward supplies, interstate purchase of machinery. So whenever you get a 14 marks question like this, you need to prepare, so total 4 statements here. So statement number 1 is statement showing the details of outward supplies under FCM. Statement showing details of outward supplies under FCM. Then you take second statement, that is statement showing details of inward supplies under RCM. Inward supplies under RCM, because inward supplies under RCM is also your liability, correct or not? So these two will be your gross liability, and then statement number 3, that is input tax credit. Input tax credit. In this input tax credit, even statement 2 also should be included, correct? Will you agree with me? Because even whatever we paid as GST under RCM, we need to include it here. And finally, we get statement showing computation of net liability or net GST payable. Okay. So now, first detail is outward supply. So that we have mentioned in the first statement, outward supplies covered under FCM. Then next one we have seen is exempted, that is also outward supply under FCM, there we mentioned. And thereafter the next one is purchases. Purchases will be inward supply. Inward supply on which GST paid can be availed as ITC. What GST? 6 lakhs, and this is goods. This is goods, machinery. So machinery interstate. So other state, outside the state. So interstate, which means what is the rate of GST? 5%. So therefore 6 lakhs into 5%. So 6 lakhs into 5% is 30,000 IGST. Clear here? And thereafter the next one, that is, he has obtained legal opinion from a local firm of advocates to enter into the contract with the joint venture for providing services to it. That is, legal services and services provided by individual advocate or firm of advocate to a business entity. So this Sukhdev is a business entity. Whether their previous year turnover data is given, no. Means definitely their aggregate turnover. So he crossed the threshold limit for registration under GST and is duly registered. Means definitely his aggregate turnover during the previous year exceeds threshold limit. Therefore this has two adjustments. First, we need to add it to RCM liability and we can take ITC with respect to that. And this is within the state. In case of advocate services, general provisions. Location of recipient will be taken as place of supply. Where the supplier is located? Local firm. Local firm means within the state. So therefore CGST, SGST. So 1 lakh into 9%, and 1 lakh into 9% is GST liability on inward supply under RCM. Statement B. Clear? Statement B, inward supply under RCM we are taking, plus this can also be taken as ITC. So it should come in statement C also. Is it clear? It should come in statement C. So two adjustments. First, RCM liability, even on that we can take ITC. So it should come in ITC also. And then next one. Next, so he has obtained accommodation from the state government to locate his office close to the seashore. So this is also covered under RCM. Services by way of renting of immobile property to a business entity, where the business entity is registered, is covered under RCM. Government providing services to business entity, so is covered under RCM. So state government means again intrastate. So therefore 2 lakhs into 9%, again two adjustments. One, it should be taken in RCM liability. Again, it should come in ITC also. Clear? Then next. So thereafter, he gets a portion of petroleum silt that we discussed. He sells the petroleum silt to a SEZ developer in Mumbai, outward supply. But is there any GST on that? Why? So petrol, petrol non-taxable. Exempted includes non-taxable. But the moment it is supplied to a CZ, it will become zero rated. You understood? It will become zero rated. And zero rated, what they are doing? Under bond or LUT. So don't add it in the liability. Is it clear? Suppose if they have not given that point, if this point is not given, he has filed bond or LUT to claim benefits. If this wording is not given, then we can take the assumption. That is, assume that they are exporting upon or supplying to SEZ upon payment of IGST, and that IGST we will take here. But here clearly given under bond or LUT, which means zero rated, nil. Then next one. Suppose if they give, he sells a petroleum silt to a supplier, to a buyer in India, then Non-taxable. Petrol is non-taxable supply. Then consideration is received towards transfer of tenancy rights, which according to Sukhdev is not liable to GST as it has not suffered stamp duty. See, whatever it may be, tenancy rights, transfer of tenancy rights is taxable in the hands of the tenant. So therefore 8 lakhs will be taxable. And what is the rate of GST with respect to that? 9%, 9%. Why 9%? So transfer of tenancy right, whether they gave it to any other person? No. But definitely the property will be in that state only, na? Then only he can transfer the tenancy rights. So intra-state it will be treated. Then customs भी आज पूरा हो जाएगा. No. Now जाएगा. So next class में आएगा. Okay. Then say this, because I am having throat pain, but I just wanted to discuss few questions on GST. That's why I am discussing. So in next class I will take customs. Already I said this, that will be relayed for you also. Okay. And say this. On violation, so this point we discussed, na, tenancy rates. On violation of the terms in the production sharing agreement, Sukhdev has paid liquidated damages to the government, exempted consideration for tolerating an act, services provided by government to business entity. In the list of exemptions, specific exemptions, we have consideration for tolerating an act. So that 3 lakhs will be exempted. So it is not taken here. Okay. Then next. So this is exempted, consideration for tolerating an act. Then he has been assigned the right to collect royalty on behalf of Maharashtra government as excess royalty collection contractor. He has noticed that the mining leaseholders have short paid 2 lakhs as IGST from what has been exempted to him under the assignment. Read it carefully and tell me what is the treatment of that. 2 lakhs we have to pay, because in case of excess royalty collection contractor, whatever amount which the leaseholder is already paid, so the ERCC is not required to pay. Now they have been assigned as ERCC, and what is the shortfall? Leaseholders have paid less 2 lakhs, so means that 2 lakhs he need to pay under RCM. So the 2 lakhs itself is IGST. On that don't compute any rate and all. So the 2 lakhs itself is the GST payable under RCM, and that can be taken as ITC. Clear here? Then next, he has sold self-fabricated machinery through his agent in Mumbai that has been used for 2 years, the value of which is not available in the open market value. The agent sells it immediately to an unrelated customer in Mumbai, 10 lakhs. How much will be taken? In case of principal agent transaction, open market value or 90% of the resale price. So 10 lakhs into 90%, that is 9 lakhs. So 9 lakhs, that too agent is within the state or in other state. See there, Mumbai. So therefore it will be coming under intrastate. So chargeable to CGST, SGST. Why are we not taking 10 lakhs in this case? Because in case of sale to an agent, the 10 lakhs is the price at which agent has subsequently sold to an unrelated buyer. So open market value or 90% of resale price at the option of the supplier. So therefore 9 lakhs will be taken on that CGST, SGST. So then next, opening balance of ITC. So that will be taken in statement 3. So opening balance 18,000, 12,000 and 60,000. And next anything else over. So all the points. So like what we need to do is that parallelly you need to prepare 3 statements. And in these 3 statements in 3 pages we need to enter the transaction each and every point. And then so first notes and all separately. After these 3 statements, notes to above. So every point explanation. If that big notes and all not there, you follow this style. This is easy. So wherein in the table itself you give the notes. In the table itself you give the explanations. If you give the explanations then and there, you will not miss. At the same time, no need to separately remember and write it in a different place. So you can do this way. And but only thing, number of pages will increase, but it's okay, it will be comfortable. And finally you need to arrive at the correct answer. It's not about number of pages, it's about the correct answer and the explanation, for which we need to get full marks. Now first statement total is what? GST payable under FCM. So that is 2,02,500 and 2,02,500. Then second statement total is what? GST payable under RCM. That is 27,000, 27,000 and 2 lakhs. But for payment of this, we cannot utilize electronic credit ledger. Now, third statement total is what? Input tax credit. Opening balance plus inward supplies 45,000 and 39,000. Why difference? Because there is a change in the opening balance. So because of that there is a difference, 39,000 and 2,90,000. Now, should we do any reversal? That you need to keep in mind, because this is the point which we miss in the exam. So what we do is that, okay, input tax credit we got, reduce it from the liability, arrive at the net liability. No, this input tax credit is subject to reversal if we have any exempted supplies. Now go to the question, and anywhere it is given that inward supplies are partly used for taxable and partly used for exempted, you start analyzing the inward supply. He has purchased certain machinery from outside the state to render services to the joint venture at Mumbai High. Okay, Mumbai High is taxable. So inward supply used for outward supply, which is taxable. So therefore no need to do proportionate reversal. Are you understanding here? Suppose if it is given Mumbai High and Bombay High, then no, Bombay High is exempted. Bombay High is exempted, Mumbai High is taxable. You understood or not? So then what we need to do? We need to do the common ITC proportionate reversal. Don't miss this pa. Okay, so clearly it is given that machinery is used only for Mumbai High, as Mumbai High is taxable. So inward supply used for taxable, outward supply full ITC we can take. But if it is used for Bombay High is what? Exempted. So then definitely proportionate ITC we need to do. So here that problem is not there. Okay. He has obtained legal opinion from a local firm of advocates to enter into the contract with the joint venture. Again, for which one? Above. So therefore inward supply used for taxable, outward supply. So no need to take proportionate ITC. He has obtained accommodation from the state government to locate his office close to the seashore. Actually it is a common ITC. Why it is a common ITC? Office is partly used for making taxable supplies, partly used for exempted supplies, which means it should be coming under common ITC. Then next, any other inward supply? Any other inward supply? No, all these are outward supplies. So actually on this 2 lakhs, whatever GST is there, that proportionately we need to do the reversal. Is it clear? So here that is not done. So directly it has been computed. So 2 lakh 2,500, 2 lakh 2,500. Okay, minus ITC of IGST. IGST credit is how much? 2,90,000. First it is utilized for payment of CGST, SGST. Thereafter they utilize CGST, SGST, and then FCM liability CGST 31,000. Then added RCM liability, and total liability paid is 58,000, 27,000 and 2 lakhs. Actually here they missed that proportionate reversal, but this is actually suggested answer question for November 2019. It's okay. Maybe they have not given, they are asking us what is the supply and determine the tax payable in cash. So please provide suitable notes where required, they have not considered. But if the same question comes in today's situation, no, same ICI will change the answer. Yes. So they will change the answer. They will say you have not done the proportionate reversal. So this 2 lakhs into exempted turnover divided by total turnover needs to be reduced from the ITC. What is the exempted turnover here? 6 lakhs plus 3 lakhs, 9 lakhs divided by total turnover. You understood here? So like that we need to take and we need to do the reversal. So this reversal of ITC point, keep in mind. In that question they did not do. It does not mean it is not there. So it may be there in some other questions also. So please be careful with respect to this. So that is this, and you can write a note, as to how the computation of reversal is done. That is adjusted total turnover or total turnover, exempted turnover. This is the common ITC. So proportionate reversal, you just add it to the liability, okay, or you reduce it from ITC. So that is with respect to this. Then another question you see, so yes, this question is related to refund of unutilized ITC on account of inverted rate structure, okay. Sir, could you please explain provisions relating to bond or LUT in terms of availing ITC in export? I explained here already. I explained, no. So how refund of ITC we get in case of export? You please check the video once again, pa. Or I did not understand what question you are asking. So see this, question number 48 is last question, pa. And remaining questions and all already I recorded, and tomorrow it will be uploaded. You can start solving that questions tomorrow itself, and next week I will be taking like most probably Monday we will be having, Monday or Tuesday customs class will be there. I will let you know on that you come and we will complete the customs portion, okay. Sorry for that, I needed some break, that's why, because again tomorrow I have intermediate class, that's why, pa, okay. Then J&K Company, because I don't want to rush and complete it, so I just wanted to discuss in my normal pace for that reason. Because if I rush and take till 6 o'clock or 7 o'clock today, complete it, I don't want to do that. Just one day, extra day. J&K Company, a registered supplier under GST, engaged in weaving yarn into fabrics, has provided the following information. Nature of various intrastate supplies during April 2021, value of supply excluding GST. So outward supply of fabrics, tax rate of CGST, SGST at 2.5% each, 30 lakhs. Inward supply of rayon yarn, tax rate CGST, SGST at 6% each, 24 lakhs. Inward supply of service for processing the yarn, tax rate of CGST, SGST 2.5% each, 4 lakhs. So here if you see, what is the inward supply rate? One is that is 12%, and another case it is 5%, but it is services. We will not see services, we will see only inputs. And inward supply of machineries, that also we will not see, just inputs you see. This is inputs, pa, and this is input services, and this is capital goods. Now inputs rate is what? 12%. Output rate is what? 5%. Whether the GST rate on outward supply is less than the GST rate on inward supply? Yes. So is it an inverted tax structure? Yes. Now the concern has not provided any other supply other than the outward supply referred above, means only this is the outward supply. ITC in respect of all types of inward supply as given above was claimed in the relevant GSTR 3B as well as reflected in 2B. Means whatever ITC that here it is matched ITC. Other applicable conditions for claiming the refund are duly complied with. You are required to compute the maximum refund amount eligible under Rule 89 sub Rule 5 of CGST rules for inverted duty structure. Also provide working notes for your calculation. So what is the 5 points that we need to get? First we need to know ITC on inputs. What is the ITC on inputs? ITC on inputs is 2 lakh, 30 lakhs in, 24 lakhs into 12%. 2 lakh 88,000. Number 2, inverted turnover. Inverted turnover. Inverted turnover is how much? 30 lakhs. Inverted turnover is 30 lakhs. And what is adjusted total turnover? Adjusted total turnover. So if you see, here it is only one. Only one we have 30 lakhs. So which means both are same. And then number 4, what is the GST on inverted turnover? 30 lakhs into 5%, 1 lakh 50,000. Then ITC on inputs and input service. Don't take capital goods. Only inputs and input services. Inputs and input services. Even though they gave capital goods, but that is irrelevant information here. So what is the ITC on inputs and input services? 24 lakhs into 12%, 4 lakhs into 5%. How much? 3 lakh 8,000. So now, what is the refund? Maximum refund equals to, so 1 into 2 by 3 minus 1 into 4 by 5. So what is this one? 2,88,000, and this is same, 30 lakhs divided by 30 lakhs minus 2,88,000 into 1,50,000 divided by 3,08,000. So which means 2,88,000 minus 2,88,000. So how much? 1,47,000. I will calculate. 1,50,000 divided by 3,08,000. 1,40,000. 259. So 260. So 2,88,000 minus 1,40,000, 260 is 1,47,740 will be taken as the refund. So 1,47,740 will be taken as refund. So like this, a question can be asked here. Then another question, you see, question number 49. Question number 49, I have not given it in solved workbook, but this question I have coined for the purpose of computation of interest on account of wrong availment and utilization of ITC. This is an extra question, not there in solved workbook, okay, but I have given this in amendments video. And this question, you see, Mukund Traders, because this is a new amendment, so on this how the question could come. Mukund Traders registered in Gujarat have opted to file returns on a monthly basis, and for all the months they file GSTR 3B on 18th of the month following every month. For the month of October 2022, they have wrongly availed 1,50,000 and reversed the same in January 2023. So they availed ITC in which month? October 2022. How much wrongly availed? 1,50,000 and reversed the same in January 2023. So which means on account of wrong availment and reversal, we don't have to pay interest. Only if that 1,50,000 is utilized, we have to pay. Their tax consultant is of the view that interest is not payable on account of Finance Act 22 amendment. You are required to compute the interest payable, if any, based on the following information. Month September 2022, opening balance in ITC is 3 lakhs and ITC availed is 2 lakhs. Utilized for payment of liability 4 lakhs, closing balance 1 lakh. So this statement is given in the question itself. Okay. So October 2022, opening balance 1 lakh, 5 lakhs. In this 5 lakhs, this wrongly availed ITC is 1,50,000 and they utilized 3 lakhs. So what is the closing balance? 3 lakhs. Now, whether whether the closing balance of ITC falls below the wrongly availed ITC? No, which means we have not utilized the wrongly availed ITC in October 2022. Then again November 2022, what is the closing balance? 1 lakh. Whether the wrongly availed ITC falls below, that is whether the balance in ITC falls below wrongly availed ITC? Yes. To what extent? To the extent of 50,000, which means 50,000 utilized, 50,000 utilized in November 2022. Is it clear? Then again December 2022, so out of 1,50,000 availed, how much is utilized? Still how much? Now December 2022, opening balance 1 lakh, ITC availed 2,50,000, utilized 1,50,000, closing balance 2 lakhs. Whether the closing balance falls below 1 lakh? No, which means we have not utilized that 1 lakh. Again January 2023, 2 lakhs, ITC availed 1 lakh, 3 lakhs we paid, and in that 3 lakhs 1,50,000 is reversed, wrongly availed is reversed, which means we have utilized only 50,000, means interest is computed only on 50,000. So that 50,000 we need to compute interest from the date of utilization till the date of reversal. Okay. Now what is the date of utilization? For November month, when are they filing 3B? No, not 20th, 18th of December. For November month, when are they filing 3B? Check the question properly. Heading clearly given. 18th of next month. So 18th of December. So 18th December they have utilized. Okay. So interest will be computed from 19th December. Sir, but the due date is 20th December na sir. Then won't we compute? No. So it is the actual date of filing GSTR 3B or due date of filing 3B, whichever is earlier. Whichever is earlier. So we need to take 18 December as the due date of, that is 18 December as the date of utilization. So we need to compute interest from 19 December. Now for January we reverse. For January when the 3B will be filed? 18th of February. 18th of February. So from 18 December 2022 till 18 February 2023. Don't count 18 December because 18 December only we filed 3B. So therefore you count from 19, which means 31 minus 18, that is 13 days in December, 31 days in January and 18 days in February. So 62 days. For these 62 days we need to compute interest on 50,000 into 18% into 62 by 365. Clear here? So first we need to write the provision. What is that provision we need to write? That is as per section 53. So read with rule 88B, interest on account of wrong availment and utilization is payable at 18% per annum. And ITC shall be construed to be wrongly availed and utilized if the balance in credit ledger falls below the wrongly availed ITC. So that is 1,50,000. Also wrongly availed and utilized ITC is the extent to which such balance falls below 1,50,000. Therefore in the present case, in November 22, the balance falls below 1,50,000 to the extent of 50,000 and the interest shall be payable on the same. So then period of computation of interest and computation of interest. Clear? So then next, 1 second. So question number See this question. One more question, pa. So this is MTP question. It is in your solved workbook, question number 19, page number 119. Honeycure Laboratories Limited is a registered supplier of bulk drugs in Delhi. It manufactures bulk drugs and supplies the same in the domestic and overseas market. The bulk drugs are supplied within Delhi and in the overseas market directly from the company's warehouse located in South Delhi. For supplies in other states of India, the company has appointed consignment agents in each such state. However, supplies in Gurgaon, Haryana and Noida, UP are effected directly from South Delhi warehouse. The drugs are supplied to the consignment agents from the South Delhi warehouse. Honeycure Laboratories also provide drug development services to drug manufacturers located in India. So, they are engaged in both supply of goods as well as supply of services, and including testing of their new drugs in the laboratory in Delhi. The company has furnished the following information for the month of January 2021. Advance received towards drug development services to be provided to RO Chem Limited, a drug manufacturer located in Delhi. Drug development service have been provided in February 2021. It is February 2021 and invoice is issued on 28/2/2021. So, actually, we are required to compute the GST liability of January, but payment is received in January, for which invoice is raised in February. In case of services, what is the time of supply? Invoice date or payment date, whichever is earlier. So, whether GST payable on advances in case of services? Services, yes. So, we need to pay GST on advances in case of services. So, therefore, on this 5 lakhs GST payable. And what will be taken as the place of supply? This is drug development services. So, performance based service in relation to goods. And here, in case of section 12 of IGST Act, so it will be general provisions. So, location of recipient. What is the location of recipient? Drug manufacturer located in Delhi. And what is the location of supplier? Delhi. Therefore, it will be coming under taxable intrastate, which means chargeable to CGST, SGST. And services rate is what? Drug development service 9%, 9%. So, therefore, the computation will be advance receipt for drug development service CGST, SGST 5 lakhs into 9%, 5 lakhs into 9%. Understood? Then, second transaction pa. Second transaction is advance receipt for bulk drugs to be supplied to Novik Pharmaceuticals, a wholesale dealer of drugs in Gurgaon, Haryana. Invoice for the goods is issued at the time of delivery of the drugs in March 2021. In case of goods, GST is payable on advances? No. Are they into composition scheme? No. If they are into composition scheme, GST payable on advances with respect to goods. Otherwise, GST not payable on advances with respect to goods. So, whether this will be taxable or not taxable in this month. So, this will not be taxable in this month. It will be taxable in March, because the time of supply in case of goods will be due date of invoice or actual date of invoice, whichever is earlier, due to that reason. So, then supply of bulk drugs to wholesale dealer of drugs in Delhi. So, to wholesale dealers of drugs in Delhi. So, it will be goods, supply involving movement of goods. So, ending point of the goods Delhi. Therefore, again it will be taxable intrastate. So, taxable intrastate, but the rate will differ because it is goods 2.5% CGST, 2.5% SGST. Then next, bulk drugs supplied to Anchor Pharmaceuticals Incorporation USA under bond. So, export of goods, correct? Export of goods under bond or LUT means no need to pay GST. So, on this 90 lakhs we do not have to pay any IGST. Then next one, drug development service provided to Unipharma Limited, a drug manufacturer located in Delhi. Again, so in case of services, so location of recipient Delhi, so again it will be taxable intrastate, taxable intrastate, and 6 lakhs into 9% and 9%. Then you are required to determine the GST liability of Honeycure Laboratories for the month of January with the help of following additional information. For January, consignment of bulk drugs were sent to Cardinal Pharma Private Limited and Rochester Medicos. Both are agents of Honeycure Laboratories Limited in Punjab and Haryana, interstate. They are located in Delhi, they are making supply to agents. Supply to agents means Rule 29. As per Rule 29, we need to take open market value or 90% of the resale price. So, this Cardinal Pharma and Rochester Medicos supplied these drugs to medical stores located in their respective stores for 60 lakhs and 50 lakhs respectively, which means take 60 lakhs plus 50 lakhs, 110 lakhs into 90%, because the price at which the agent is subsequently selling to an unrelated buyer, that is 110 lakhs into 90% should be taken, that is 99 lakhs. And this 99 lakhs will be chargeable to IGST, and this is sale of bulk drugs, so therefore 5%. So 99 lakhs into 5%, understood? Then bulk drugs have been supplied to Ron Medicos Private Limited and a wholesale dealer of bulk drugs in Gurgaon, Haryana for a consideration of 15 lakhs. Honeycure Laboratories Limited owns 60% shares of Ron Medicos Private Limited. Open market value of the bulk drugs, so 60% shares. So 1% directly or indirectly controls the another. Then related party transaction, so Rule 28. And Ron Medicos is not eligible for full ITC, which means open market value is not deemed to be transaction value. Then we need to determine the open market value. What is that open market value? 30 lakhs. So 30 lakhs will be taken as the value. And why we will not take 15 lakhs? If recipient is eligible for full ITC, we would have taken 15 lakhs, but it is not. So therefore 30 lakhs will be taken. So 30 lakhs into, again it is interstate, because where this Ron Medicos is located, Gurgaon, Haryana. So in case of goods, ending point will be taken as a place of supply. So interstate 5%, 30 lakhs into 5%. So now if you total, that is the total GST liability, but you need to write the notes clearly, why GST payable, what is the place of supply, everything we need to write, okay. So this is also a very good question, and like this, a similar question, they gave it in May 22 RTP. Same like this question, one question they gave in May 22 RTP. So therefore, this kind of question also will be tested, like valuation not directly they will not give. Application. So we applied Rule 29, 28, like this application based question they will be giving, okay. So I think remaining questions and are already I completed. Yes, so remaining questions and all already I have discussed, and that will be uploaded. So by today it will be uploaded, or tomorrow morning you can start watching that, okay. And customs alone, so I think it will be on Monday or Tuesday, I will let you know, okay. Either Monday or Tuesday I will do that, okay. So in the group I will just post it, you can come and attend. So even I will share for online students also, I will share the YouTube link on that day. Fine, thank you. And yes sir, this PDF, it's already there in my website, see this. And there are many resources which I have given. This will be uploaded in the video itself, YouTube video itself. And see this summary of monetary limits and summary of time limits is already there. So if you want a summary of monetary limits, time limits, and even customs case law summary, you can go through that, okay. Fine, thank you.